That's a stark contrast with his declaration at Trump's first impeachment. Then McConnell said he did not consider himself an impartial juror. And California has now passed New York to become the state with the largest number of coronavirus-related deaths, more than 40.
Okay, ladies and gentlemen, time to buy Swiss franc. If you're looking to place an order and trade Swiss franc, I'm placing an order to buy at 0.8909, just right here. Okay, so let's wait and see if it will get executed. You still have time, so place your order, because we just placed an order, and then start trading Swiss franc. Speak to you later.
I'm sorry, I'm on the 4,000 watch, even though Pharaoh disagrees with me. 31,390 on the Dow, up 112 points. Critically, the VIX doesn't move, 21.67. Yields are a stew this morning. I'll call it inflation data at 8:30, I believe. Brent up. Maybe I'll look at pound sterling. Francine, tell me about pound sterling.
Well, pound sterling, Tom, is, I guess, some of, the concerns that we had over Brexit just didn't come at the forefront. And then it's a vaccination story, Tom. And it's the fact that they're actually getting the vaccination right. They have enough doses. And we also had some trial data saying that if you use the Pfizer vaccine, you're 75% protected in a first dose. And remember, the UK is just delaying the amount of time it spends between the first and the second dose. And so that's encouraging news once again for the UK. But global stocks, again, pushing forward. I'm looking outside of equities. Actually, the moves are pretty muted. We did have some positive corporate news. And you know what? We also we had an exclusive interview, Tom, with the second biggest bank in France, or banking group, BPC, and we had a really interesting conversation on the back of it. Natixis surging 8%.
Very good. He is a part of history of the Civil War and Reconstruction. He is the first Republican senator in Louisiana. Dr. Cassidy, let's listen.
Anyone listening to those arguments, the House managers were focused, they were organized, they relied upon both precedent, the Constitution, and legal scholars. They made a compelling argument. President Trump's team were disorganized. They did everything they could but to talk about the question at hand.
I would respectfully suggest the gastroenterologist in intelligence was insulted by what he saw. Kevin Cirilli will clear the Air Force, Chief Washington correspondent. Are there other Bill Cassidys out there for the Republicans, Kevin?
You know, it was interesting. Yesterday when I was up there in the Senate talking to sources as these opening arguments were underway, and right as it began, this 8-minute long, 6 to 8 minute long video from the House impeachment managers on the Democratic side, they played this video. Tom, you could have heard a pin drop, because as you know from being in the Senate, there are so many television screens broadcasting all of the different networks, and every network had it on and was playing the images. It was a surreal moment, from the cameramen to the senators to the staff in the Hill, to see in real time the video images juxtaposed of former President Trump's comments with the incident in the location where it occurred. And you know, you put that in the perspective from the remarks that we just heard from Senator Cassidy.
Will we get that emotion today?
I don't think we will. I think yesterday's opening arguments are really where they are going to continue onward in terms of the 16 hours for each side to make their cases. And then, according to leadership, the final vote on the second impeachment will either be on Sunday or Monday of next week. And I do want to note that while yesterday Senator Cassidy voted for that the trial was itself constitutional, he was not voting to convict. That's a nuance, obviously. And former President Trump, there still remains virtually no chance that he will be convicted.
Kevin, so if Donald Trump doesn't get convicted, and if it's a short trial, which I think is what we're expecting, what was the point of it?
Well, I think that there was a very real need for there to be the process of the democratic lowercase d institutions to channel all of the angst. 7 people lost their lives. In addition to that, this was the most major breach at the Capitol in history of the United States Capitol. There was 25 to 28,000 troops that were present. The Capitol building is enclosed, the entire campus, with barbed wire fencing, and there remains 5,000 National Guardsmen still patrolling the halls. And there has been a reckoning of sorts that has occurred ever since January 6th.
So why still this loyalty to Donald Trump?
I think that Republicans are making this argument, Francine. It's less so about the loyalty to the former president and more so about the legal arguments. I mean, this is a trial. And so as you know, Francine, many of these elected officials have law degrees. And so they're looking at this as a trial.
Kevin, CNN reports the president was more than upset. President Trump was more than upset. Do we see a surprise, like a change in legal counsel or a different tone from legal counsel today?
I think what was striking was that it almost feels like they were going through the motions. And as a result of that, because it's been Leader McConnell's political orbit and others have forecasted that there virtually remains no chance of a conviction, and that mainly the senators are trying to look at precedent, to look at, Tom, whether or not a former president can be, in fact, convicted, and they've provided this legal wiggle room, that it really almost doesn't matter what the arguments are.
Kevin, thank you so much. Kevin Cirilli starting his day early here, 11 a.m.-ish is when we may see the impeachment process, the trial process, I should say, move forward. Futures up 15, Dow futures up 113 as well. Part of that movement is the shares of Microsoft. It has been an extraordinary run as part of that big cap tech bubble. A briefing from their chief executive officer, Satya Nadella. Look for that in the 5 o'clock hour. This is Bloomberg. Good morning.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Bloomberg is your best source for earnings, news, and analysis. On Wednesday, GM CEO Mary Barra and Coca-Cola CEO James Quincy. following their company's earnings announcements. This is Bloomberg.
Good morning, everyone. Bloomberg Surveillance. Thank you for being with us. Francine Lacroix in London. I'm Tom Keene in New York. To piece together where we are, Cameron Christ joins us, a macro strategist with Bloomberg that barely describes the way he synthesizes in what's going on. Cameron, we staggered 7 weeks into the year. Maybe it's 8 weeks. Who's counting? We're all rewriting our 2021 outlooks. How are you rewriting your outlook?
Well, I'm not quite yet because my outlook focused heavily on the potential threat of inflation as the year progressed. And I think that's still the sort of theme that people are watching and will need to watch. And we'll get the first iteration of that with the CPI report today.
Get the CPI report today, and we'll see how it filters in. And we're hearing from everyone. The Fed will wait. Chairman Powell speaking today as well. Cameron, it devolves over into the equity markets. It is a great bull market. From where you sit, looking at the Bloomberg, how unloved is it?
I think,
as you can see, we just opened new position for Swiss franc at 0.8909. This is long position. We still hold few positions, as you can see, on Swiss franc, one short and one long position. So let's see where it will lead us to. Okay, guys, if you placed an order, I'm sure you're already opened. So let's make profit from this trade.
Cameron, junk bonds are moving. Is there a danger that actually people are taking risk, which is fine now, which could then lead to something uglier in 2 years?
Oh, absolutely. I mean, we're at a point where non-financial corporate debt as a percentage of GDP is kind of literally off the charts versus the 3 decades preceding the pandemic, and yet you get less yield for owning junk bonds in absolute terms than you ever have before by a pretty comfortable margin. I think the yield on junk bonds is only about 45 or 50 basis points above the average 10-year yield that you got in the first 2 decades of this century. So there's relatively few pennies to pick up on the street from owning this stuff. And I guess the question is, when and where does the steamroller arrive to run you over?
Cameron, when you look at what exactly is priced in the markets right now, is it, are they worried that we're going to have higher inflation, or do they just expect, Jay Powell, who's doing an important speech today, by the way, to give them an indication that he's happy for the economy to run hot?
Well, I think those two things are not mutually exclusive. In fact, they're probably quite complementary. Yes, markets are pricing in a risk of greater inflation. You can't just look at break-evens because tips trade like credit instruments, so there's an element of risk appetite embedded in that. But even if you adjust for this, markets are pricing in certainly accelerating inflation moving forward. And you can see this in other ancillary ways, like relative performance of various equity market sectors. I think at this point, the Fed has been pretty adamant that they're not moving anytime soon. But if we are in a situation where we get another stimulus package, economic growth closes the output gap, and we zoom the other way, so that economic growth and indeed the level of output is above trend, then that would naturally incur some overheating. And if the Fed is basically prepared to stick its fingers in its ears and close its eyes over this, then yeah, the outcome would certainly be an acceleration of inflation in a way that perhaps we haven't seen in a number of years.
Cameron, in the time we've got left, there's a generalization that the economists think Bitcoin is a fraud, and there's a lot of market participants that are loving Bitcoin at 46,000 right now. Cameron Christ on Bitcoin, who's right?
Well, I think my attitude is this. 3 years ago, we heard about all this mumble about Bitcoin being money. I think we've kind of dispensed with that. Bitcoin, you don't need Bitcoin to be money for it to go up. And that's the people who are most interested in Bitcoin are the people who own it and have a vested interest in making other people buy it. No one's really talking about it. Maybe Elon Musk is trying to ginny up some interest. No one's really talking about it in terms of money anymore. So I personally think it's just another speculative tulip.
Cameron Christ with us. Cameron, I want you to stay around. We've got a lot more to talk about besides tulips as well. Francine, I want to go over to London. I think we've really ignored the tulips in the hotels with the basic idea of the pandemic, of quarantine, and everybody's going to end up in the net across the street from our studios. It's not working out, is it?
Well, we don't know that yet, Tom, but so this is the UK plan, right? Is if you're coming in, so you're still allowed to travel into the country from red zone countries, so where they have a lot of variants, they put you in a hotel, but you pay for it. So you have to pay around, $2,400. I think it's for a 2-week stay, so it's definitely not the net. It's, I think, something a little bit below that. And then if you're from, the countries where you're allowed to come in, you still have to make 2 tests. So, we'll see whether it actually keeps virus mutations under control. And I guess my question to Cameron is market underpricing the health? I mean, I know we look at financial engineering and structure and all of that, but actually we don't really know if the vaccines will work in 6 months. And is that the biggest thing that markets should be watching out for today?
Well, it's certainly a tail risk that the vaccination process and the efficacy of the vaccines isn't what everyone is assuming. I think even the pharmaceutical companies have said that it doesn't confer a sort of forever immunity, and that there's going to have to be top-ups in the future. At this juncture, I don't think it's certainly a base case that the efficacy will wane after a few months. And if that were to be the case, then obviously that would imply a significant downside risk to a lot of assumptions out there.
Cameron Christ with us, and he will continue with us. And Francine, I just want to say, from all the numbers I see, the United Kingdom is doing a better job or speed of job of getting vaccines out there versus the United States. I think that's been underreported.
Well, the process, Tom, the process is actually very clear, and I think they're getting to the over 50s in about 4 to 5 weeks, which frankly is like light speed compared to other countries.
Yeah, I just really want to make note that I think that's been buried in the sort of the zeitgeist of hotel quarantine, all that. The UK is nailing the vaccine process versus many other countries, including the United States. Peer-to-peer conversations, of course, always with David Rubenstein. Really timely. Charles Koch, Koch Industries, what do you need to know? This is the guy that owns Dixie Cups. That's all you need to know. No, he's one of the great supporters of more conservative voices across this nation. Charles Koch, the future of conservatism, the future of the Republican Party. This is Bloomberg. Good morning.
Animals across the globe are dying by alarming rates. A report by World Wildlife Fund and the Zoological Society of London found that populations of mammals, birds, amphibians, reptiles, and fish fell by 68% in the last 50 years. In the tropical Americas, the rate was worse. with a 94% decline in the same period. And the size of observed wildlife populations in or near freshwater globally have fallen by 84%. Continued human abuse of the planet may lead to the collapse of the systems and resources that allow global civilization to persist in the first place. Overfishing and hunting, invasive species, pollution, habitat loss, and climate change are the main causes of this animal population crash. The report compiles evidence from 4,392 different vertebrate species and concludes the evidence for humanity's destruction of biodiversity is unequivocal. Using powerful computer models to simulate policy that stops biodiversity loss, scientists have explored scenarios to slow the trend. Such measures would include expanded conservation, increasing agricultural yields while also eliminating food waste, and cutting the global meat intake in half. By changing what the world eats and how it produces that food, nations could stop this tragic loss of life by almost 50%.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
You need to have a business model fundamentally where when you do well, the world around you is doing well. If that is broken, it's very hard to fix.
This is Bloomberg Surveillance. I'm Ritika Gupta with the Bloomberg Business Flash. Twitter reported fourth quarter revenue that beat estimates, but the social network added fewer new users than projected, and Twitter warned that audience gains in 2021 will slow down compared with last year's surge that was fueled by the pandemic. And the controversial former pro football quarterback Colin Kaepernick has joined the SPAC frenzy. Kaepernick is co-sponsoring a blank check company that will look for a business in the consumer sector. He hasn't played in the NFL since 2016. That's the year he launched player protests during the national anthem to bring attention to racism and police brutality. And in the latest episode of Bloomberg Studio 1.0, host Emily Chang sits down for an exclusive interview with Microsoft CEO Satya Nadella. One of the topics they discussed, antitrust issues facing big tech companies.
You need to have a business model that really is aligned with the world doing well. I think that's what's being litigated, right? Which is there are certain categories of products where the unintended consequences of the growth on that category or lack of competition in it creates issues. And so that's what I think people are all looking at and saying, hey, what's the fix for that? But I don't think big by itself is bad, but competition is good. And every business, in particular, the businesses that are large and have high scale, the unintended consequences of scale cannot be dealt after the fact. They need to be dealt while you're scaling.
That was Microsoft CEO Satya Nadella. You can catch his exclusive interview on Studio 1.0 with Bloomberg's Emily Chang at special times today. That's coming up at 1 p.m., 5:30 p.m. and 9:30 p.m. Eastern Times. And that is your Bloomberg Business Flash. Francine.
Thank you so much, Ritika. So we're looking at equities, we're looking at bonds and FX. If you look at the equity story, of course, it's all about reflation. If you look at global stocks, they're still pushing forward on the heels of positive corporate news, certainly here in Europe, but also improving virus trends and U.S. stimulus plans. And then I also want to show you platinum simply because it was gaining. I don't think I have it in this data check, but I'll do it in the next one, Tom, in honor of St. Valentine's.
In honor of St. Valentine's, thank you for reminding me of St. Valentine's. That was a saintly reminder as well. Mari Barra of General Motors in the 8 o'clock hour, a timely interview on Norway. This is Bloomberg. Good morning.
focusing on is not so much what goes inside the cars of the future. So they're not working on doing a self-driving car or an autonomous vehicle themselves, but rather they're focusing on the surroundings. So everything to go on outside the vehicle in the future. So that's sensors, cameras, radars that are embedded into roads, street signs, traffic lights, bus stops, infrastructure that's going to provide information, something to help the vehicle know what's going on around it, to help it, stay on schedule if it's a bus, or avoid other vehicles, avoid accidents, provide information about weather conditions, potential hazards down the road, and so
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Bloomberg is your best source for earnings, news, and analysis. On Wednesday, GM CEO Mary Barra and Coca-Cola CEO James Quincy. Following their company's earnings announcements, this is Bloomberg.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Now, we were just talking about the markets and the reflation trade with Cameron Kreis. He's Bloomberg macro strategist. Cameron, what does the reflation trade actually mean from China? We were speaking with our Enda Curran about some of the activity over there, some of the imbalanced recovery that we're seeing, even if we're seeing strong recovery. Could we be importing inflation from China as well?
Yeah, very possibly. I mean, lost in a lot of the narrative of the last year or so is the fact that the old bugbear of external imbalances has reared its head once again, and the U.S. runs a tremendously large trade deficit broadly and specifically with China. So insofar as Chinese production costs are rising, even outside of tariff considerations, then that would, all else being equal, lead to higher import prices. And if domestic stimulus in the United States leads to more consumption of goods imported from China, then in a sense, it's exporting some of the stimulus.
Strategy gives us a new chance to buy Canadian dollar. I'm looking to buy at 126,949. We're just right here. So we placed an order. So if you're looking to buy Canadian dollar against United States dollar, here's your chance. This indicator gave us buy signal. Okay, speak to you later, guys.
It always goes further and longer than rationality, than traditional concept of rationality think it would. In terms of what could pop it, I mean, I've discussed earlier in the segment. Inflation is an obvious one. If you get a very sharp acceleration of inflation, then even from thinking in terms of a fundamental prism, you're reducing substantially the net present value of future cash flows. And when you're trading at very large multiples, ultimately you're paying more for cash flows into the distant future. Inflation means you have to discount thus significantly, thus lowering the present value of stocks.
But Cameron, to inflation, it all depends on how much the Fed and central banks in general are willing to look through it. What do you think the pain threshold will be like?
I I think in the short run, it's going to be pretty high. It's pretty clear that the Fed in particular is sort of laser focused on employment. And until you get the unemployment rate down, certainly I think into the fours and potentially even the low fours, the Fed would, I think, would be quite reticent to act on trends in inflation, because they'd be concerned about sort of stamping out the ongoing labor market recovery. I think there's almost this complacency in terms of central banks, is that they have a game plan and they know how to combat inflation. Of course, knowing how to do something and having the desire, the fortitude to do so are two separate things. And that's going to be an interesting trend, particularly as we move through the year, is whether the Fed has the fortitude to move on inflation, if that is going to be warranted.
Yeah, and I guess the ECB also has the added complexity of what happens to euro if we see euro strength, especially compared to the dollar. What's your take on dollar?
Well, I think it ultimately should weaken because of sort of twin deficit considerations. And that's a sort of a longer term macro forecast, if you will. In the short run, the two headwinds to that are positioning, where we have seen some of those positions close, but I think broadly speaking, the market generally is still short of dollars on anything but a very, very micro term basis. And for the time being, there is this theme percolating through the market that vaccination speed is dictating expectations of short-run currency returns. And countries like the UK and the US are outperforming continental Europe by a fairly comfortable margin. So if and as we see the Eurozone, major Eurozone countries start to ramp up vaccinations, then that will provide a foundation, I think, for the euro to appreciate perhaps more aggressively. Until then, there's always going to be this risk that markets focus on this wedge between sort of the Anglophone countries that are doing a better job of vaccination and the continental Europeans who are widely deemed to be lagging in that regard, and thus delaying an eventual reopening and normalization.
Thank you so much, Cameron Kreis there, Bloomberg macro strategist, joining us this morning. Now let's get straight to the Bloomberg First Word News. Here's Ritika Gupta. Hi, Ritika.
Thanks, Francine. House impeachment managers argued that Donald Trump must be held accountable, and the Senate has agreed. Senators voted 56 to 44 that it is constitutional to try the former president on whether he incited a mob to storm the Capitol. 6 Republicans crossed party lines to vote with the Democrats. That sets the stage for opening arguments. And Donald Trump has asked Palm Beach to let...
I have to cancel the order to buy Canadian dollar because it moved substantially higher. So basically, let's wait for another time. So you need to cancel as well the order if you follow my trades. Okay?
Coronavirus stimulus package. Amongst the revisions, they want to end drug rebate caps for pharmaceutical makers. House Democrats also want to expand health insurance programs for the poor. And one dose of the Pfizer-BioNTech vaccine offers 2/3 protection against coronavirus. That's according to data seen by the UK government. The data shows that one Pfizer dose gives as much as 65% protection. 2 doses see protection rise to as much as 84%. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine.
Ritika, thank you so much. Coming up in the next hour, we'll be talking to William Lee, Milken chief economist. A lot to focus on between stimulus and impeachment. This is Bloomberg.
generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about the environment, the politics of global warming.
We will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Persistent is it?
How much of a pop in prices do we get as the economy opens and consumers have money in their pockets? And then second, how sustainable is it?
If we're able to get people vaccinated, we're going to make big improvements on unemployment, and it wouldn't be surprising to see the cyclical elements of inflation build.
The policy will remain accommodative despite the reflationary building, so the front-end rates will remain anchored.
There could be some momentum building behind yields.
We're going to get inflation of airfares and hotel rates.
Most of the investors believe that, you know, the inflation and rising rates are a bit out there, and that there's probably more downside risk to rates than huge upside.
The zeitgeist of the moment on reflation. Heard from Mr. Kaplan there. Thank you, Michael McKee, for that important conversation with the Dallas Fed president. Right now joining us, and it's been way too long, he joins us with the Milken Institute, his tour of duty with Citigroup, and of course his important work with the dreaded Green Book of the IMF. Folks, if you pull out the Green Book of the IMF, William Lee invented, and you'll find out where our financial stability is. Bill Lee, where's our global financial stability right now? Back in the appendices of the Green Book, how are we doing?
I think the assessment has been universally that the high rise in asset prices of the lockdown, this changing consumer patterns from goods and services to asset prices, and quite frankly, the financial system is very stable, especially since the Fed has come in to provide so much liquidity and actual support in actually buying up corporate bonds and ensure that the plumbing of the system is actually in shape.
Along the path, Dr. Lee, of where we are heading, there is an assumption of a return to a higher service sector inflation and a reduced disinflation in goods producing. Is that going to, or is there a new paradigm?
I'm glad you're bringing this topic up, because everyone's talking about the fear of inflation that's about to come upon us, because the stimulus is many times the multiple of the output gap. We're going to see so much in the way of recovery. Everyone is just chomping at the bits to spend. And I think one of the things is that the service sector itself has been crushed because of this recession. There's been of 10 years, there's been about a huge doubling of the number of people who are working in the service sector. There are 6 people in the service sector for every person in manufacturing of goods and goods. So what we see in this world is that inflation is going to come from the service sector, but when we open up, there's going to be bottlenecks. So there's a price level jump that we're going to see. That's very different from inflation. And as President Kaplan said, itself is worried about sustained increases in prices that go over and above their target of 2.5%. We're not going to see that, because after 2 or 3 months of say 2 or 3% inflation, things should start to level out as supply constraints start to come back online again.
Sorry, Bill, are you really telling us that given the, 1.9 trillion, I mean, it's a sizable chunk of U.S. GDP, and that's still inflation?
It's going to cause a huge bottleneck in terms of demand. People are going to want to spend their money. But what we've noticed given the stimulus that was given before is that people have been spending a lot of that money to the extent that they have discretion, paying down debt and buying assets. And that accounts for a good chunk of why the equity markets, and that explains a lot of the Robinhood crowd that's been going out speculating on GameStop. So we have a lot of asset price inflation, yes, and that's with the new stimulus. What is a shame that's not talked about is that the fact that that happens means that the stimulus isn't going to places where it should go. It's not a stimulus package. It's really a relief package. The people who are unemployed in the service sector, entertainment, hospitality, and leisure, those are the businesses are closing. Those people are actually spending as they would normally spend. They're trying to come back to the levels of normal spending, so that deficiency of demand is made up for by the relief package. All of that money could, if it's focused on that, not cause inflation. What would cause inflation in asset prices is the fact that it's going to the wrong people.
Yeah, and I really actually want to come back to, if you look at the difference, and I know, Bill, we started the crisis where the U.S. economy was in a different place to Europe, but, if you look at a relief package, does it need to be much more targeted, like furlough programs, or is the U.S. approach okay?
Actually, that's exactly the point. The targeting has been insufficient. And the evidence of its insufficiency has been the enormous amount of spending on Pelotons and GameStop shares, as opposed to supporting the unemployed worker that's been laid off from the local restaurant and the failed businessman who.
Okay, ladies and gentlemen, you need to place a stop on profit for Swiss franc, and I'm going to place stop on profit at 0.8992. I will point out where it is. Just right here. I will change color. So at least I will make sure that if it will go down, I will close this trade in profit. Okay? So, and I will just write that this is stop. Okay, just right here. So all of you guys, you have to do the same, okay?
Other aspects of President Xi's speeches has been that say that he wants to spur technological innovation within China. He wants China to be independent of the rest of the world. The chip shortage has been an example of where China has been trying to buy up a lot of chips in advance of all this, but the chip industry has been a high priority item.
Billy, is a great missed call here that we're going to get 5 or 6% U.S. GDP, plus or minus 1. Who knows, that we're going to get it for a longer duration, and that imputes over to a China GDP of 7 or 8, or dare I say, 9% real GDP?
Well, that really brings into question the notion of locomotive. Is the U.S. going to be a locomotive for growth for China, or is it?
We just closed position on Swiss franc at 0.89092. Okay, hold on. We'll wait for another chance to enter position.
World. For the United States, we still have a huge demand for laptops and electronics that come from Asia, and China is a big supplier of that. That's why China's surplus has been so enormous, and our deficit with China has been so enormous, because we've been buying up laptops like crazy and other electronics that come from China, and medical supplies. So in terms of our ability to pull China up, yes, that is in some ways China letting us be their second leg of the dual circulation strategy.
Bill, very quickly, are they exporting any inflation to the rest of the world?
That's been a misnomer. In the mid-2000s, the big fear was the deflation exported by China. China wants market share more than anything else right now. Any sorts of increases in production costs are going to be absorbed by the Chinese producers, because their desire is to become dominant in key industries in the rest of the world. They're not going to let price increases prevent them from doing that.
Bill, thanks so much. Bill Lee there of the Milken Institute. Now, up next, we speak with Lawrence Sauer, Johns Hopkins University Associate Professor of Emergency Medicine. We talk COVID-19 as we continue tracking the pandemic. This is Bloomberg.
feel we have a very good chance to not only have positive growth, but perhaps a somewhat more encouraging positive growth.
The rebound in the second and third quarter will be quite strong because the expectation is that the vaccine will help clear the way to less restrictive lockdown.
We are going to have a recovery, but it's going to be an uneven recovery.
Of course, it will have direct impact on our growth forecast, and it will be very difficult to reach 6% of growth.
You're going to get a roaring 20s type of recovery and a boom period.
We are certainly seeing ourselves towards the second quarter being in almost opening the economy as much as one can.
We should not be too quick to cut back on the expansionary fiscal policy.
We'll get there. The question is not a question of if, it's a question of more when.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Tom, we continue, of course, to track COVID-19, and Bloomberg has developed this unique partnership with the leading authority on the pandemic. Johns Hopkins has been at the forefront of the international response, and every day we bring you insight from experts in public health, infectious disease, and emergency preparedness. Well, joining us today is Lauren Sauer, Johns Hopkins Associate Professor of Emergency Medicine. Lauren, thank you so much for joining us. When you look at the numbers, should we worry about the variants, or should we applaud the fact that the number of cases and deaths are going down?
I think it's safe to do both. But as we look at the cases, I think the first thing we want to do is make sure that we don't relax our approach to protecting against the virus yet. So these variants are going to make their way across the globe. We're going to see them more and more, particularly as we increase our sequencing efforts. And so even though we're seeing these cases reduce and we're seeing the case counts go down after the holiday surges, we have to remember that the virus is still there, and we still have to protect our most vulnerable communities as things like the vaccine rolls out, as we do a better job of looking for sequencing.
Okay, time comes to sell short euro. I'm looking to sell at 121.267. I'm placing an order to sell short at 121.267.
Place, and we're working to get better at it. I think much like testing we saw early in the pandemic, the efforts are going to be spotty, and then everyone's going to start to bring those technologies online to do a better job. The UK is obviously a world leader in genomic sequencing, and they have built both the technology and the systems, the infrastructure to do it well. And so as we continue to look for variants and we continue to get better to get better at sequencing the virus from the samples, we will see more and more variants. This is common in viruses like this. It's the variants that are propagating quickly and are causing increased transmission, or potentially causing increased transmission too right now, that we're particularly worried about. Those are the ones that we want to keep an eye on in particular.
Lauren Sauer, when you look at the day-to-day vaccination process, when do we start vaccinating those younger? When do we come down 5 years or 10 years lower?
Yeah, I mean, I think the key right now is to keep working towards convincing the healthcare workers that are still hesitant and convincing the vulnerable populations that are still hesitant, because that's how we're going to protect the severest disease. That's how we're going to protect our hospital and our health systems. I think we have a ways to go before we start vaccinating our young, healthy crowds. But, in the U.S., for example, we could see that as early as later this year. A lot of it depends on supply and that distribution process, but we also have to get a lot better at how we're distributing. We're seeing a really pocketed approach to distribution, and part of that's because of our disaggregated healthcare system, but part of it is because the rollout is just happening so quickly, and each vaccine has its own unique supply chain challenges.
Well, where are we on that distribution now? It's only going to major hospitals, right?
Yeah, we're starting to see a push towards pharmacies. Walgreens has a partnership. There is a move to get vaccine directly into the hands of long-term care facilities to distribute, and many hospitals are partnering with their long-term healthcare facilities. So there are these strategies. We're also seeing in major cities big vaccine centers beginning to open. I think that's helping, but that being said, it all relies on having the vaccine, right? So, and the people showing up. So we have to make sure that all of these really challenging elements are falling into place at the same time, so that we're not wasting vaccine, and so that we're putting vaccine into the arms of people who need it.
Lauren Sarr, thank you for the brief with the Johns Hopkins University, and of course Virus Go out there, VRUS, a lot of other good statistics out there from different news organizations as well. Futures up 14, they've been higher this morning, but there is a persistency to the bid. Futures up 14, Dow futures up 96, those levels 39.19. I'm sorry, I'm on the 4,000 watch on SPX. We're not there yet. 31,374 on the Dow. NASDAQ with a nice lift as well. I haven't had time to look at the Russell 2000. It's too much to the moon as well. The VIX 21.65. Brent crude 61.46, a persistent lift in oil that bears watching and respect. And dollar goes nowhere, and that's important because so much of it is sterling strength. 138.39. Francine Lacroix on the 140 watch on pound sterling. We have a simulcast on radio, on television. Next, this is Bloomberg. Good morning.
New order came for Swiss franc. I'm placing an order to buy at 0.89087, just below previous order, just right here. Okay, I'll remove these. Don't forget, you're welcome to follow my trade, so you'll make profit as well. You need to place order, like I said, and then we'll wait until we'll be in profit. And then we will place a stop on profit. This is how we make money. Speak to you later, guys.
That was either illegal or caused disruption. This was really political satire, kind of writ large, and it was all about actually trying to get to the man himself and make him see how we see him. And in order to do that, we knew it had to be big and it had to be colourful and it had to be somewhere where everybody could see it. It's important because we didn't just do this for attention. This was actually about making a serious point, which is that the majority of people in this country do reject the politics that Donald Trump represents.
Start your mornings with Bloomberg Surveillance. Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
This is Under the Radar.
This equity market's looking good.
You heard it first here on Surveillance.
The conversations you need to hear.
Always going to be fascinating here, particularly the view forward.
The business team you love to watch.
John, I would wrap into your lousy data check.
Have I got a deal with you for the rest of this year?
This is what I do to keep you two apart.
Live from 6 to 9 a.m. starting February 16th on Bloomberg Television.
for 2021 is still very much a cyclical story.
People are just trading big round numbers.
Firms don't have as much pricing power as they used to.
We're in danger of those markets overheating.
It's really about just an overwhelming amount of monetary stimulus in the system.
A lot of the US stimulus actually isn't stimulus at all. It's an antidepressant.
Until it's clear we're out of the woods, I think we've got to be aggressive.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance Live on Bloomberg TV and Radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Farrow. Equity markets back on top. The S&P 500 advancing 12 points. Tom Keene, Chairman Powell, centre stage a little bit later today.
Maybe driving those markets higher. It's going to be interesting. John, the good news is it's a webinar for the Economic Club of New York, so I'm not going to have the chicken roubert, as they call it, at the hotel. Usually it's Powell assembled in front of the worthies of New York. It's going to be on a webinar, but just as important, John, and he's got to address inflation worries.
There's always a complaint about rubber chicken somewhere. Tom Keene, on those inflation worries, the print, 0.3%. That's the median estimate. The print comes in about 90 minutes' time, Tom. PPI overnight from China just starting to climb a little bit higher. I wonder how people view the factory gate price phenomena with the read-through to CPI in the months to come.
It pushes us away from the deflation spiral, which Lisa's so worried about. But, John, I got to go to the inflation report and partition out service sector dynamics. They've come in lower inflation, goods producing dynamics, higher inflation. They're exactly on the same point right now, and what they do in the next 6 months determines what Jerome Powell does.
8:30 Eastern, Lisa. The data just around the corner.
Yeah, you guys basically stole my thunder. You're talking about both the CPI data that we're going to be getting as well as the Jerome Powell presser that we're going to be getting today. Later, 8:30 a.m., though, that January Consumer Price Index data, very important to see the component of gasoline prices going up. That's what people think will actually push it a little bit higher. But right now,
well, I need to cancel order to sell short euro. As you can see, it's moved far from my order I placed. So all of you can please cancel order, because we need to wait for next momentum and to see what direction this will go. Also, I probably will cancel order to buy Swiss franc for same reason, right? Okay, do the same, guys. See you later.
Would be, does he think that high asset prices, arguably bubblicious asset prices, help the Fed get closer to their goal of higher inflation and higher long-term employment? And there is a real tension right now, John, as an increasing number of people start talking about at what point it becomes counterproductive for the Federal Reserve.
Let's clear up the rubber chicken issue once and for all.
Please.
At these Economic Club of New York events, how they take place. So get a seat in the audience, and we eat different food to people like Tom. Tom sits behind the speaker like the Oracle with a group of about 10 other people, and Tom's meal is not rubber chicken. I get rubber chicken.
He gets caviar.
With some good friends on Wall Street. Tom Keene's having something else. Let's be clear about that.
The biggest problem here in the tradition of the Economic Club of New York is it's impolite up on the podium, as they call it, John, or the lectern, or, the stage. You can't eat until the speech is over. So you're down there leaning over, taking Lisa Abramowitz's dessert, and I'm up there starving, unable to eat the chicken roubert.
But you get a drink, so nothing else matters. Let's get to the price action. Equity futures up 12 points on the S&P 500. Just a little bit of a lift this morning, Tom. We advanced a third of 1%. In the FX market, euro
it's
unchanged.
A big move. Come on, it's
Euro
a big
dollar,
move.
121.23, and in the bond market, 116.55. Let's be clear here, Tom. The session, it's a huge move over the last 3 months, just absolutely massive.
Absolutely. There's no question about it. As I mentioned in the 6 a.m. opening, John, the idea here of JP Morgan up 32%, I believe it is, from November 6th. The Russell 2000 up 40% since November 6th. We are recalibrating what a bull market is.
Let's get to the first guest of this morning. Lizanne Saunders joins us now, Charles Schwab Chief Investment Strategist. Lizanne, great to catch up, as always. Just walk me through how uncomfortable it is just to stick with it, to stick with what's working at the moment.
Well, the problem is what is working changes on a week-to-week basis. There was so much attention, obviously, on the most heavily shorted stocks in the GameStop saga, in reading headlines suggesting that this was some brand new phenomenon, but the sort of rise of retail traders and the dominance they're having goes back to last summer. It's just that when you first started to see that increase in speculative activity in single stocks in the options market, it was concentrated in those leadership stocks at the time, the FANG-type stocks, the big five stocks, and then they kind of rode the rotation that really kicked into earnest in November when we got the vaccine news into the energy stocks and the financials. And for probably a variety of reasons, not least being just the sort of social media kind of driving a flash mob, it went into these more arcane parts of the market. Now that sort of attention is coming back into more macro earnings related. So I don't know whether you're going to notice it as much. We've just been telling investors just the obvious. Differentiate between gambling and speculating on stocks or areas of the market with no underlying fundamentals and longer-term investing.
Lizanne, I'm going to bore you with my question I always ask you because I think you're better at this than anybody in the industry. What are we actually doing with our money? Charles Schwab has a knowledge of flows second to none. What are we actually doing with our money?
Well, we've seen a slight waning of domestic equity flows in the last couple of months, but interestingly, you're seeing a pickup in flows to markets outside the United States, which we think is a good sign that the whole notion of diversification is no longer as hard to sell as it's been in the recent past. And then also at the more sector level, flows have started to pick up on the more cyclical parts of the economy, like energy, like materials, like industrials, where you're seeing some outflows out of areas like consumer discretionary and tech. So I think the flows are shifting toward this recovery focus with that more cyclical commodity-oriented bias.
Do you think, Lizanne, that there is complacency in any corners of these markets, that the reflation trade that's underway is underpriced and that we'll continue to see inflation expectations climb as we get more stimulus packages passed? Is there any signs to you that that consensus has gone too far?
Well, from an inflation perspective, we think we're going to see it, but it's going to be more a function of price shocks. We don't think we're sowing the seeds of anything resembling a late 70s, early 80s style inflation environment, but one where you have imbalances between demand and supply. We think you'll see that. Plus, the comps get really easy on an inflation front heading into what was the pandemic shutdown period of last year. The question is, what point does it spook investors and or the Fed? I think they're going to have a decent amount of patience. The other area of complacency I worry about is this sense that once we're at herd immunity, everybody's getting vaccinated, that pent-up demand is going to be unleashed in this massive wave. I just think the nature of pent-up demand on the services side of the economy is different than pent-up demand on the goods side. And we really have met a lot of the demand on the goods side, autos, housing related. But on the services side, if you used to get a haircut once a month and you haven't gotten one, you go back when your salon opens and you get a haircut. You don't get 7 of them. You don't go out to breakfast, brunch, lunch, tea, dinner, and dessert every day to make up for that lost restaurant time. You don't take 6 vacations in a row. So I just think we may have to curb our enthusiasm for what pent-up demand means to the economy, given that it's more on the services side than the goods side.
Lizanne, is there some inconsistency in your view in the reflation trade that's being priced into many markets that you think is based in reality and treasury yields at less than 1.2%?
Well, I think that yields where they are reflects an improving growth environment, less so a prospect for a significant increase in inflation. And ultimately, from an equity market perspective, it's not nominal yields that matter, but of course, real yields. And that story at least being put out there by the bulls to support still quite high valuations at this stage hasn't waned.
Lizanne, good to catch up. Thanks for being with us this morning. Lizanne Saunders there of Charles Schwab. Thank you. Tom, it's something that gets lost too often, I think, that you can have a dynamic where treasury yields rise, but financial conditions stay loose. And that ultimately is going to be what matters for the Federal Reserve and Chairman Powell in the year to come.
And that goes to the real yield. I thought Jim Caron of Morgan Stanley did a great dissection yesterday of that equation of the nominal yield less inflation expectations to the residual, which is John Farrell's program on Friday afternoons, the real yield. And John, the number right now is negative 1.05. The real yield hasn't budged, and that's what Caron says matters.
Yep, ultimately that is what is going to push the Fed to step in, maybe, Lisa, and do more at the long end. More QE, asset purchases, but I think that's where they're going to have some disagreement on the FOMC. It's a chorus on rates. Everyone's singing off the same hymn sheet. When it comes to the asset purchase program, you can sense the division starting to bubble away.
You raise a really interesting question, though, this idea of how far can yields rise in the U.S. before they provide an attractive place for people's money? At what point do they start attracting money away from the risk assets and become a better value proposition? And that creates tighter financial conditions. To the extent that they don't do that, right, there's a margin where they still don't offer attractive yield. And then financial conditions can remain loose. But until then, you do wonder at what point you can have this perfect Goldilocks scenario.
The perfect parallel does not exist, but if you reflect on 2013, Tom, as we have done often, we had a huge move in yields through the summer of 2013 off the back of just a comment from the former chairman, Ben Bernanke. Equities to the moon at a 30% year.
Well, yeah, I mean, you're going to get those moves. Maybe we're a little bit wiser along the 2007 road, you know. I mean, there is a natural disaster and a pandemic, but maybe we're getting a little wiser. What I would look at, John, which we do off the Bloomberg terminal, are the correlations that are out there, like flat dollar, weak dollar. John, DXY is 12 or 13%. Pound sterling, you're the richest guy in the block, John, because you're paid in pound sterling.
Trying, Tom.
It's unbelievable.
Well, you know, and Bitcoin too. I will say though that in 2013 there was a huge sell-off in credit, in tandem with rates, and so that's the concern. If you get this sort of mass rotation, the other concern, and this is important, just to sort of hammer this home, the infrastructure of markets with such crowded trades and such difficult positioning based on how much liquidity has been pumped into the markets, John. That's the other.
7-11-28 Wall Street time, John. Appropriate dose of gloom.
Come on.
Seriously.
All right.
It's just.
Hey, some people
Happy
tune in for
Wednesday.
it. It's like a morning coffee with Lisa. Just the ultimate downer every single
Futures
day.
up 13.
Monday to Friday. I heard a rumor it might start early soon as well. From New York City for our audience worldwide.
Really?
Good morning to you all. Live on Bloomberg TV and radio from New York to Boston to DC and San Francisco and on SiriusXM channel 119. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. House Democrats used dramatic video of the storming of the Capitol to begin Donald Trump's second impeachment trial, but the prosecution is far from winning enough votes. Today, impeachment managers will make their opening arguments. They'll try to convince the Senate to convict the former president of encouraging a mob to disrupt the election count by Congress. To do that, they'll need 17 Republicans to cross party lines. And President Biden's push to open U.S. schools is running headlong into his pledge to support teachers. They're demanding more coronavirus testing, vaccinations, and other safety measures before returning to the classrooms. This week, the CDC is expected to release new guidance for schools to reopen. The White House is trying to avoid being caught between the CDC's science and the clout of the teachers' unions. Twitter reported fourth quarter revenue that beat estimates, but the social network added fewer new users than projected, and Twitter warned that the audience gains in 2021 will slow down compared with last year's surge. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Bloomberg is your best source for earnings, news, and analysis. On Wednesday, GM CEO Mary Barra and Coca-Cola CEO James Quincy. Following their company's earnings announcements, this is Bloomberg.
women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
Do you have any interest if President Biden invited you just to come and take a tour of the White House just to see what it looks like?
If he wants to talk about how to empower people, boy, I would be there in a nanosecond.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
I think that each side did a decent job. I don't think either side overwhelmed the other.
I thought the president's team laid out what this is really about. This is about the Democrats trying to cancel the guy that 74 million Americans voted for.
President Trump's team were disorganized. They did everything they could but to talk about the question at hand. And when they talked about it, they kind of glided over it, almost as if they were embarrassed of their arguments.
Some of the Republican reaction to the start of President Trump's impeachment trial: Senator Mike Braun of Indiana, Congressman Jim Jordan of Ohio, Senator Bill Cassidy of Louisiana. From New York City this morning, good morning to you all. Alongside Tom Keene and Lisa Bramvetz, I'm Jonathan Ferro. Your price action at Lyft on a big morning. CPI coming in about 1 hour and 12 minutes time. Chairman Powell speaking at 2 p.m. Eastern, a little bit later this afternoon. Ahead of that, equities heading back towards all-time highs, comfortably through 3,900 on the S&P 500. In the bond market, yields with a mild lift, up not even a basis point to 116.37, and foreign exchange snooze fest. Euro dollar goes nowhere, Tom. 121.19.
Yeah, we're watching that carefully, and of course, inflation data coming out here at 8:30. I'm going to call that an hour and 10 minutes as well. Now in Washington, and after the terrific three-voice video, Kevin Cirilli joins us. Kevin, I want to go to Senator Braun in Jasper, Indiana, way down south. It's where the Indiana Basketball Hall of Fame is, which is the only thing that matters. He's from a different place than a lot of the Democratic Party. Jordan, we know from Ohio, and then you've got the physician from Louisiana upset at the lawyers yesterday. How does President Trump react and coalesce those three different Republican voices forward?
I think it's less about what former President Trump thinks in terms of where the party is, and more about what Leader McConnell thinks. Because to your point, but to your point here, Tom, that was a brilliant lead-in with the SOT string that we just aired, because it really captures the divide of where Republicans are and where Republican constituents are all throughout the country. I was struck by a CBS poll over the last couple of days in which you have 56% of Americans want to see a conviction in the United States Senate. And I bring this up because Republicans are divided. And so because Republicans are divided, that's why you're seeing elected officials react in the sense of running the gamut, so to speak, across the spectrum.
The wrestling coach from Ohio doesn't have to worry about a primary threat.
He doesn't.
Does the doctor from Louisiana, Bill Cassidy, have to worry about a primary threat? Or does Braun from the Indiana Basketball Hall of Fame have to worry about a primary threat?
So, you know, and yesterday I was up on Capitol Hill and I was in the Senate, and I gotta be candid here. You could have heard a pin drop when the Democratic House impeachment managers played their 6 to 8 minute long video in which they juxtaposed former President Trump's speech along with the social media capturing videos of what happened on January 6th inside of the Capitol. Very surreal to watch that on location of where the incidents of January 6th took place. But back to your question here is that the Republican Party has been able. He did cast a vote that the trial itself was constitutional, and that's a process argument. It's a process political argument, but it does provide some political cover in states like Louisiana, where Republicans are divided on their thoughts about January 6th.
Kevin, do we know what the former president's reaction was to yesterday's events?
You know, my colleague Jennifer Jacobs on Bloomberg's print side, she reported yesterday that he was watching this developments unfold in Mar-a-Lago. I can tell you, though, based upon my own reporting and talking to folks yesterday in Congress, that from a staff level to a member level, they've largely moved on. This is the process playing out. It's a leftover assignment, for lack of a better word, from 2021 and the final days of President Trump's term. But even President Biden yesterday was meeting with CEOs. He was hosting an economic meeting about the stimulus. And Jen Psaki, the White House press secretary in the Brady briefing room, had said that you know, he's really focused on that and less so on the stimulus.
Can you just paint, Kevin, the import of Mitch McConnell coming out and saying that this is a vote of conscience, of basically signaling, opening the door to a potential conviction by Republicans, even if they voted against the constitutionality of this? Can you talk about the importance of that from a symbolic place in terms of President Trump's place in the Republican Party?
To be candid, it serves as a funnel, Lisa, for Republicans to be able to capture the divide amongst Republican constituents all across the country, from rural America to suburban America, where Republicans are, about the best path forward for the Republican Party over the next couple of years. But beyond that, it is pretty striking. But I can tell you that the expectation on Capitol Hill is that there remains virtually zero chance that Trump will get convicted.
Kevin, what should we look for today before you get ready for Sound On at 5?
I'm still, you know, maybe I'm a nerd, but I'm still looking at GameStop and the hearings on GameStop and Robinhood, and you've got some House hearings and the Senate banking. But, you know, I guess I'm a policy person at heart.
Okay, Kevin, thank you. Kevin's a relief.
I didn't expect
down in Washington, D.C. I have to say that was unexpected to me.
I thought it was going to be stimulus.
As well. Is that the focus of Sound On later? These hearings?
You know,
Bloomberg Radio, 5 p.m. Eastern.
John, his show's on the deflation spiral.
With Lisa Brammer's guest appearance.
You said, what's the worst case scenario? He's giving a worst case scenario. Honestly, just trying to see around corners, not predicting gloom and doom.
Isn't your base case the worst case scenario for most people?
Well, I don't know. I can't speak for them.
Relatively speaking, just based on the people that come on this program.
John, I'm looking at stimulus talks. That's what I'm looking at right now. It was good change of topic. But I will say, I really do think it's important to see those developments as it gets crafted ahead of the February 16th convergence.
Just charting this move in crude on a Bloomberg terminal quickly. It is huge, Tom.
Yeah.
What we've seen off the back end of October, just absolutely massive.
Yeah,
WTI and the move in energy stocks as well over the last 3-4 months has been phenomenal too.
Amrita Sen was lights out with energy aspects. I think it was 2 days ago, maybe 3 days ago. John, she made real clear this is about demand being less of a failure than expected. Demand is actually pretty darn good, and her range goes up to $80 a barrel. She's not talking 100 or a breakout, but she's got some enthusiasm here.
58.70, 60% move since October times. Just absolutely phenomenal. I think this sort of breathed some life into the inflation debate a little bit more, Tom. The energy story might give some central bankers a little bit of space to say, you know what, this is commodity driven.
Yeah.
Elsewhere, some supply chain
disruptions. Well, you know,
Abramowitz
had the 2 barrels of oil in her living room there, you know, negative $20.
Great trade.
Yeah, it was incredible.
Trade.
I mean, the kids were a little bit upset about the fumes.
The smell, yeah.
A little bit toxic.
Another word of the next 3 months might be transitory. How many times have we heard that?
Oh, really?
Transitory.
Or slack.
When it starts to pick up.
Transitory.
When you start to get that inflation pressure.
I can't pronounce it.
Well, we already heard it from Robert Kaplan. He was saying it's all going to be temporary.
Look through it. Look through it. Big morning. 8:30 Eastern, we'll get an inflation print. Not the deflationary spiral that Lisa might be looking for.
Oh, dear
Could
Lord.
though, never know.
Who knows? This afternoon, the main event, Chairman Powell at the Economic Club of New York, 2 p.m. Eastern Time, full coverage, Bloomberg TV and on Bloomberg Radio 2. Up next, John Riding of Breen Capital. This is Bloomberg.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
You need to have a business model fundamentally where when you do well, the world around you is doing well. If that is broken, it's very hard to fix.
From New York City, this is Bloomberg Surveillance Live on TV and radio. For our audience worldwide, blink and you missed it. A move of almost 20% since the back end of October on the S&P 500. 3 months and change. Unreal. We had some way to up, about a third of 1% on the S&P. Futures advanced 13 points. On NASDAQ futures up a third of 1%. We're up 43 points so far. I'm still waiting for the first sign of capitulation on the street for some of those people that sounded bullish back in October, November time, who now look relatively bearish to upgrade their forecasts. I know it's the middle of February, but still, given the move we've had over the last 3 months, you know it's a matter of time. One of the relative bears, so to speak, makes a move. Citi, SocGen, Who else was down there? I think B of A at 3,800 year end. 39.
They got to move higher.
Not to say it's wrong, Tom. Let's be clear here. Doesn't mean it's wrong. It's a year-end forecast. By definition, that is not wrong. It is the middle of February. Just wondering if someone makes a move.
They're going to recalibrate. Absolutely.
We'll
Up they go.
Let's get to the bond market quick, Tom. 2s, 10s, 30s in the United States. Chairman Powell a little bit later, 2 p.m. Eastern time. US CPI coming in about 60 minutes time. Ahead of all of that, 10s unchanged, up almost a basis point to 116.55. Up about a basis point and change on a 30.
4 digits.
To 196. 195.95. Tom, let's finish on this. This is an example of how quickly a bond market can move. You think about the low levels we're at, how quickly that yield can move. Switch up the board and finish on this. 10-year gilt yield, okay, has basically doubled year to date. I know exceptionally low levels, but it has basically doubled year to date. So now at about 48 basis points on a UK 10-year. Why does it matter? The vaccine rollout in the UK has been really quite good. 18.9% of the population has now received 1 dose. At the time, when they started to do this and focus on a 1-dose regime and then shift out the date for the 2nd dose, the UK got some criticism. Our understanding from the latest reporting in the UK is that according to some of the trials, some of the testing that they've done, the UK government has found out that on a 1-dose Pfizer-BioNTech regime, before you get the 2nd dose, 1 dose, you get protection of 2/3, Tom. That's really important, really, really important. And that has unlocked this huge move in yields this year in the UK. So this is the UK 10-year. You wonder what the US looks like as we roll out this vaccine just a little bit more, what the back end of this year looks like and how the Fed responds. That's a story for later, but something to think about. Romain has got the stocks on the move. Good morning, Romain.
Yeah, good morning, John. A lot to think about this morning. A lot of the movers this morning are tied to earnings. Getting GM earnings crossing the wire right now. That 4Q adjusted EPS number coming in well above estimates at $1.93. That EBIT number that a lot of people pay attention to, $3.78 billion. A lot of folks are really more interested in what's going on, of course, with that EV strategy. It's still going to take some time to dig through the release and find out exactly whether they're going to announce anything additional than what we know. Of course, we know Mary Barra has already gotten a lot of kudos for the efforts that she's taken already. I believe she's going to be making an appearance on Bloomberg Television a little bit later in this morning. Now, also in the mobility space, we had Lyft earnings last night. Revenue was down, ridership was down, but revenue per user was up, and the president over there giving a pretty bullish forecast saying that the company is expected to finally hit some of those profitability targets on a quarterly basis. He didn't say what quarter it would be, but he said it would, quote, absolutely happen this year. Uber earnings, they're coming after the bell, and remember, they're expected to be EBITDA positive this year. Mandeep Singh over at Bloomberg Intelligence, he has all the juice on this. Definitely check him out if you have a Bloomberg terminal. If you haven't checked it out, you're really missing out. Flip up the board. A couple other names here that are crossing the wire, too. We did get Coca-Cola earnings a little bit earlier this morning. Largely, their revenue and their unit case volumes were down, but they weren't quite as bad. That drop wasn't quite as bad as what the street was looking for. That's why you're seeing the shares up. Very interesting, Tom. Your Twitter, also interesting. I know you're big on Twitter. They reported earnings last night. 40 million added users there. Better monetization. Tom, you're doing something right. With Trump off the platform, it's all up to you now.
I mean, it's all up to me. Okay, Romain, but if I delete all the ads that keep coming into my Twitter feed,
don't do that.
How do they make money?
I don't know. It's all a mystery to me. I don't know how any of these Silicon Valley companies make money. But you know what, Tom? Look at this. Alibaba shares getting a boost today.
There they are, Romain.
There's a Jack Ma sighting.
Yeah. He was playing golf, wasn't he?
He was playing golf
He was playing golf.
Playing golf, and that's enough to boost the shares there. Look at that, 2 to 5 p.m. Tom, if you stay up that late, check out our show.
Look for the Jack Ma report. Now,
I can promise you
deep into the surveillance nap by then.
I can tell you he's not around at 2 to 5.
Into the nap by then. Right now, let's move to the economics. We can do that wonderfully with John Riding, not only with his service with the Federal Reserve System of America and also the Bank of His England as well. With Breen Capital, John Riding on where we are now, and of course, Chairman Powell speaking to the Economic Club of New York this afternoon. What will you listen for from Chairman Powell, John?
Well, I don't think we're going to hear anything new, right? The Fed is encouraging a higher inflation rate. They've already said the pickup in inflation that they expect to see in March and April as being, to use John's word earlier, to be a transitory effect. It's going to say if it gets higher, then we know how to deal with it. The problem is, how to deal with an inflation problem requires tighter policy, and this Fed is rather constrained with the a fear of even thinking about tapering. I think they've pretty much signaled they're going to continue buying bonds at $120 billion a month for the rest of this year.
You have a very sharp paragraph, and it's a new word, folks, that we're going to introduce right now. The over-calibration of fiscal policy. What do you mean by that, John?
Well, you know, as I was writing that piece, it was very nice to see, as putting the finishing touches on, to have the op-ed that you good folks reported on last Friday from Larry Summers, and it's the same point. The CBO, the Congressional Budget Office, says a gap of some $400 billion or so between actual GDP and potential GDP. That's the amount of additional output this economy can produce on the basis of that estimation of where full employment would be. However, if we go down this route of injecting $1.9 trillion, we're injecting far more fiscal support into the economy than there is capacity to meet that support. Now, I'm all in favor of targeted support. Don't get me wrong for one moment. There's a lot of people hurting out there. We need to see unemployment benefits extended. We need to see something done on the potential eviction crisis. Those things need to be addressed. But sending out large amounts of money to higher income households and other things that are boosting the size of that package risks stimulating the economy too much at a time when the Fed is going to inject probably something close to $1.5 trillion additional extra high-powered money through its operations. There is a risk that we are going to get an inflation problem. Probably not going to see it today in the CPI report for January, but as the year unfolds, if the inflation pickup, which we will see, doesn't turn out to be transitory, then the Fed faces a significant problem, because in the end, when inflation gets out of hand, and the Fed has to tie it, that's when the problems occur.
Here's what I'm struggling with, John. There's a question right now that how much inflation, how much stimulation will this actually provide versus just plugging a gap? And at what point can this provide longer-term inflation if it isn't helping the employment picture? Or, in fact, could it be, and I know that I'm going to get reamed for this, disinflationary, in the idea that we add that much more debt to the balance sheet without necessarily having as effective of a boost to employment and the jobs picture? What's your view on that?
Well, my view is fairly straightforward, and that is that this exercise that we are seeing in what I think should be called modern monetary economics, and this episode was rejected by the economics profession some 3 years ago as bad economics. That we are in a situation where if we run a large fiscal deficit and fund that fiscal deficit by printing money, that it will be inflationary. Now, it is true that we have a large inertia to overcome on the price front. But if you look at surveys of the public on inflation expectations have risen, not insignificantly post the pandemic. If you look in the bond market, you see that 10-year inflation break-evens are now at 2.2%, where they were at 1.5% or lower some 6 months ago. That's a 10-year break-even inflation rate. Now, the Fed will welcome that. But will the Fed address some of these signs that they have seen? As I said, I am not against in any way. I encourage providing targeted support. But as for the growth dynamic, the economy has outperformed expectations coming out of the deep hole that we fell into in March and April of last year. So I don't think once we get the vaccines in people's arms, I don't think we have this negative growth hole to fill. I think we have a rapidly closing output gap, and we're just at risk of doing too much.
Well, John, the issue at play here, though, as you know, this is not just about the aggregate numbers. This administration wants to target the bottom leg of the K and do something about the perceived injustices, not just of the last year, but the last several years. And for them, at least, this plan goes some way to doing that. It's the people that weren't part of the big move we've seen in asset prices over the last 12 months. Does that resonate with you, John?
I'm all for addressing those issues. the issues of injustice, the issues of what would you say, the bottom leg of the K. But and we'll see where the ultimate package comes out. But the proposal initially to provide an extra $1,400 per month for individuals with family incomes going up to $150,000 or higher doesn't seem to me to be addressing the bottom leg of the K. I think the bottom leg of the K, those people wouldn't recognize those income levels. Yeah. I'm all for dealing with the people in the services industry, providing them additional support and not having unemployment benefits run out in March. That is very important. But there are a lot of issues within the package that aren't about that. And I think that those people at the lower end, they're always the people who get hurt first when the economy, when the Fed tightens and growth slows, or the economy falls back into recession at some point. And so I just think that I 100% agree with that intent. I just don't think that the size of this package really addresses that. And addresses a lot of other things too.
Hurt first and sometimes recover last as well. John, this conversation,
Absolutely.
One we need to continue. John Riding there of Green Capital. Tom Keene, the debate of the moment, I think, in economics.
Well, there's no question about the debate, and we're going to hear that from Chairman Powell today. And, you know, we're already getting mail in from viewers and listeners that are, you know, going back and forth on this.
From New York City this morning, good morning. Alongside Tom Keene and Lisa Abramovich, I'm Jonathan Ferro. Equities pushing higher. This is Bloomberg.
With the First Word News, I'm Rishka Gupta. It's the second full day of Donald Trump's impeachment trial in the Senate, and House impeachment managers will make their opening arguments. They want to show that the former president encouraged a mob to storm the Capitol. If all 50 Democrats vote for conviction, the prosecution will need 17 Republicans to cross party lines. Meanwhile, Trump's defense team says that Democrats are just trying to quash a political rival. And Donald Trump has asked Palm Beach to let him stay full-time at his Mar-a-Lago resort. A lawyer for the former president says he should be allowed to live there since he's an employee of the private club. Local residents have argued that Trump shouldn't be allowed to live at the resort permanently because of zoning rules. And a House committee has advanced a portion of the $1.9 trillion stimulus package that includes a minimum wage increase. The Education and Labor Committee approved raising the minimum wage to $15 an hour. Republicans objected. They cited a Congressional Budget Office study saying that more than doubling the minimum wage would cost 1.4 million jobs. And the controversial former pro football quarterback Colin Kaepernick has joined the SPAC frenzy. Kaepernick is co-sponsoring a blank check company that will look for a business in the consumer sector. He hasn't played in the NFL since 2016. That's the year he launched player protests during the national anthem to bring attention to racism and police brutality. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
Very good chance to not only have positive growth, but perhaps a somewhat more encouraging positive growth.
The rebound in the second and third quarter will be quite strong because the expectation is that the vaccine will help clear the way to less restrictive lockdown.
We are going to have a recovery, but it's going to be an uneven recovery.
Of course, it will have direct impact on our growth forecast, and it will be very difficult to reach 6% of growth.
You're going to get a roaring 20s type of recovery and a boom period.
We are certainly seeing ourselves towards the second quarter being in almost opening the economy as much as one can.
We should not be too quick to cut back on the expansionary fiscal policy.
We'll get there. The question is not a question of if, it's a question of more when.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
That over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Pandemic, and until it's clear we're out of the woods, I think we've got to be aggressive. So the challenge will be after it's clear we've weathered it. We've got to move away from these extraordinary measures, in my opinion, and I think we'll be far healthier for it.
Really interesting conversation with Robert Kaplan there, the Dallas Fed Bank president. Interesting op-ed out this morning on Bloomberg Opinion from the former New York Fed president, Mr. Dudley. Tom, you want to talk about that now? We can talk about it later. It's up to you.
No, we don't need to talk about it now, other than he lines up the ducks. And I'm sorry, at the bottom of that essay, John, I believe Mr. Dudley's suggesting inflation control.
That's the punchline. They might have to pull back on stimulus sooner and with greater force than anticipated to keep inflation in check. We'll talk about that later.
Yeah, we will. And then, of course, this is going off the Chairman Paul's
really
comments.
interesting conversation with Robert Kaplan there, the Dallas Fed Bank president. Interesting op-ed out this morning on Bloomberg Opinion from the former New York Fed president,
on this horrific
Mr.
natural
Dudley.
disaster.
Tom, you want to talk
Albert
about
Coe
it
is
now?
at
We can talk
Yale.
about it later.
He is definitive in epidemiology for having courage to go where the poor are. He owns the high ground of the study of viruses and vaccines, not only in Africa, but in South America, and particularly the Brazil away from the prosperity of the big cities. Dr. Coe joins us this morning on vaccination. Albert Coe, I've got to go to the southern border of the United States. It is impoverished, it is Hispanic, and boy, those statistics are rich. Tell us about this virus, the vaccine path, and the poor of America. Viruses and vaccines, not only in Africa, but in South America, and particularly the Brazil away from the prosperity of the big cities. Dr. Coe joins us this morning on vaccination. Albert Coe, I've got to go to the southern border of the United States. It is impoverished, it is Hispanic, and boy, those statistics are rich. Tell us about this virus, the vaccine path, and the poor of America. Vaccines, not only in Africa, but in South America, and particularly the Brazil away from the prosperity of the big cities. Dr. Coe joins us this morning on vaccination. Albert Coe, I've got to go to the southern border of the United States. It is impoverished, it is Hispanic, and boy, those statistics are rich. Tell us
underserved communities having lower access to the vaccine than wealthier communities.
What are the best practices from other countries we can affect to get to the poor faster?
So I think I would hold up certain countries such as Brazil, as you mentioned, where I worked, where they have had mass vaccination programs for measles, for yellow fever, and they run them effectively. I think the most important thing is to keep things simple. And the second thing is to provide access and intense, numbers of clinics and vaccination sites in those communities that have lower uptakes and less access in general. In that sense, countries like India, Brazil, they're kind of models for us to follow.
Dr. Koh, John referenced earlier this study showing that in the United Kingdom, 1 dose of the Pfizer-BioNTech vaccine offered 2/3 of the protection against getting the virus. This is very good news and indicates you're going to get an acceleration of the impact of the vaccination even before the complete dose is taken. Do we have a sense of how much the vaccine has already acted as a circuit breaker to stop the pandemic?
Yeah, so Lisa, that's certainly promising news, and there's also information and very good quality information coming out of places like Israel, which have been rolling out the vaccine very quickly and giving us a snapshot of what could happen here in the United States, if we were to roll out across the population in large numbers. So at this moment, unfortunately, in order to really get what we call that herd immunity effect, that population level benefit of those vaccines through either the first dose or as well as receiving the second dose, it's going to require us vaccinating much larger numbers, much larger swaths of our population to do that. Right now, we're still less than 10% of our country has been vaccinated. We need to really get those numbers up much higher and much faster, and that's going to be even more important when we're thinking about the threat of variants.
Do you think we need to recalibrate then to optimize the rollout, Doctor, given that the UK did roll the dice on this in many ways? I'm sure it was supported by some medical evidence, but some people pushed back at the same time about doing a 1 dose and then pushing out the time between the first dose and the second dose. Is that something that resonates with you, sir, something you would endorse?
Yes, I think, again, first of all, John, I think we have to be humble. We've learned a lot, in a very short time about this virus, and we're continuously learning. And as these studies come out, and particularly the UK study that Lisa said, then that makes us more confident that, the policy that England had proposed, which is giving the first shot and delaying the second shot so they can immunize or vaccinate larger proportion of the population, may be successful. Now, we're going to, obviously, everyone's going to be looking at the scientific evidence as it rolls out, but it's certainly pointing that way, John.
Dr. Koh, I'm a little bit reluctant to ask you this because I don't think I want to know the answer. But the post-pandemic future, coronavirus is not going away. It's probably going to mutate. That's what all of the professionals in the field say. Are we going to be maskless? What will it look like as this continues to become part of the medical backdrop of the world?
Yeah, so Lisa, I think let me break that down into 2 parts, the short term and the long term. We know that these variants are emerging, and those variants are being fueled by mutations. And those mutations in of themselves are being fueled by mass, large-scale, widespread, uncontrolled transmission. And as long as we're not controlling transmission, we are going to set ourselves up for continued selection of variants that potentially may escape not only natural infection or the immunity caused by natural infection, but also that elicited or conferred by vaccines. And let me make a second point is that, this can't be done just like in the UK or the United States or South Africa. It has to be done, the control of transmission as a driver for these variants has to be done throughout the world, because we know these variants can travel, one place to the other. So that's really certainly the concern in the short run. In the long run, that means exactly, unfortunately, Lisa, your fears that we're going to have to keep continuing the public health practice of masks, social gathering, reduction, and social distancing.
It's going to be really difficult to reopen international travel anytime soon now, but thank you for your time today. Dr. Robert Koh there of the Yale School of Medicine. Tom, some really interesting case studies developing on the vaccine rollout that I think is worth our attention. In the UK, they have a situation where almost 19% of the population has received 1 dose. but fewer than 1% has received both. You compare that to the United States, and these are the numbers right now as we track them. 10.2% of the population have had one shot, but more than 3% are fully vaccinated. And that's what the UK has prioritized, trying to get people the one shot and pushing out the second dose. And the data this morning, Lisa mentioned it, it's supportive of that practice. And I just wonder how we recalibrate in the States if this starts to resonate with the medical experts here too.
This is exactly what you do, and this is the unknown, and the unknown is to be expected. How you recalibrate, and frankly, John, recalibrate, then recalibrate again, and going out 2 and 3 and 4 years, where we'll be on those booster shots.
Keep trying to optimize. From New York City this morning, good morning. Alongside Tom Keene and Lisa Bravitz, I'm Jonathan Ferro. Coming up later on Bloomberg Television, Microsoft CEO Satya Nadella. From New York, this is Bloomberg.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The
2021 is still very much a cyclical story.
People are just trading big round numbers.
Firms don't have as much pricing power as they used to.
We're in danger of those markets overheating.
It's really about just an overwhelming amount of monetary stimulus in the system.
A lot of the US stimulus actually isn't stimulus at all. It's an antidepressant.
Until it's clear we're out of the woods, I think we've got to be aggressive.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Bloomberg Surveillance. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. We welcome all of you across this nation on radio, on television. Interesting day. Chairman Powell to speak here this afternoon. And John Farrow, I mean, there's little certainty in this market. Futures up 13, a good feeling and all that. Can we be certain Powell will not talk deflation spiral?
You cannot be certain of anything ever, Tom, but I think most people believe that Chairman Powell is going to put on the green light for risk assets. I'll allow Lisa to talk about the so-called deflation spiral, but there's already pushback. There is already pushback. The Fed has put so much effort into outlining this new reaction function that when things get good, when inflation ticks higher, we won't step in. We'll allow those forces to take hold. We'll allow that trend to persist for a little bit before we act.
And what's so important here, John, is it's not a single reaction function. There is a complexity to this across monetary, across fiscal. And John, I'm going to go to Howard Ward in that brilliant conversation yesterday. The application and mystery of the new technology on all we talk about on radio and TV every day.
Yeah, the underlying inflation dynamic is one part of this, Tom, but what they respond with, I think, is the bigger issue for most investors right now. Rate story buried. Most people assume that's not going to be part of the story for the next several years. It's the asset purchase program where we don't have the guidance still. And I think it's still needling away at them just a little bit every time they speak. And that's going to be a topic for later on. Mr. Dudley, the former New York Fed president, put out this piece on Bloomberg Opinion earlier this morning. He's raising basic questions that everybody is asking. The risk. There is always a risk that the Fed has to step back in. It's the probability you assign to that risk materializing that matters from a market participant's perspective, Tom.
Right.
And most people believe the Fed won't react to a short-term burst of inflation.
And Lisa, with respect for your concern, and we make a joke, folks, about deflation spiral. We usually don't do that just on radio, just on TV. But when we have a simulcast, we're all deflation spiral. Lisa, the inflationistas have gotten it wrong so many times since 2007.
Well, that's what I wanted to say. There's a huge division forming, and right now it's not that massive, but it's growing between the market expectation of higher inflation ahead that seems to be rapidly increasing and a Federal Reserve that still sees these disinflationary pressures driving and suppressing that inflation over a longer period of time. The idea that we have an older population, that we have more debt. So you have these two contrasting narratives, even as you have economists like Bill Dudley of the formerly of the New York Fed coming out and saying this time is different. This recovery will look different. The recession was different than 2009, and there's a different amount of fiscal and monetary stimulus pumped into markets. Tom, this is the question: is this time different, and will we finally get the inflation that so many people expect?
Yeah. John, help me with a data check here.
Sure.
Futures up 13, Dow futures up 93. I've got a VIX doing nothing for me right now. John, what do you see in the bond market? I see a little bit higher yields.
A little lift. 119.81 is your new post-pandemic high. We saw that earlier this week. 117.06 is where we sit right now, up a basis point. I find this conversation slightly ridiculous, to be honest with you, Tom. In the UK, we saw inflation of, 3, 4, 5%. Governor King looked through it. Governor Carney looked through it. Inflation was never a problem. Now, I understand the source of that inflation is the issue, and that'll be something that they have to get their hands around. But what are we talking about right now? A bond market looking at 2% inflation, maybe? The outlook 2%. Rates need to be where they are now for us to think about 2% inflation, and that's a problem. Is that a problem? I don't think anyone on the Fed believes that's a problem.
Lisa,
that's the goal.
Your thoughts?
Well, no, it's not necessarily where inflation expectations are, but the pace of their increase and the fact that there is an accelerating idea that is gaining hold, that inflation risks are picking up more perhaps than people are pricing in. That idea, I think, John, is what we're talking about, not necessarily the idea of 2% inflation itself.
That sets it up nicely for this morning. Thrilled you're all with us right now. Seema Shah joins with Principal Global Investors, their chief strategist. Seema, the irrefutable fact is the big negative interest rates of Europe are coming up. We're seeing a lesser great negative interest rate drama in Switzerland and Germany as well. What does that signal?
Look, I think it's telling us that, at least that there is some kind of recovery in play.
there's still such a debate around about whether negative rates was the right path, whether it will be the right path for a number of countries in the future. My personal position on this is it creates more problems than it solves. You need to have a strong economic recovery coming through fundamentally, and negative rates actually just complicates things. But, then you see the Bank of England, which is still, maybe it's shelved it for now, but it's still in consideration. The one thing I would say is that when we look at the US, what we've heard repeatedly from the Federal Reserve is that this is their last, that is their last resort. Negative rates is not going to come unless things are looking really bad.
Seema, I do wonder, though, whether this comes down to antiquated inflation targets and just an absolute obsession with them. How important is the FX channel for a central bank? Because let's be clear about it. The FX channel is the reason the ECB went negative. It's the reason the S&P went negative. It is the reason why most central banks went into negative territory. It was to do something about the currency because they are nearly obsessed with a mandate they have not been able to hit. How important is the FX channel for the broader economy?
No, I think you're spot on there. And I spoke to you guys about a year ago about this when we were talking about ECB and negative rates. And I think that's what it was. It was all about the euro. And we were almost getting to a point where there was going to be a currency war because each central bank just needed to have their currencies that much weaker. And the weak US dollar story, I think that is going to be a function for the US Fed is that as they start to think about what more can they ultimately do with their monetary policy at this stage. If things get worse, I know that's not the central scenario, but if things were to get worse, what else could they do? We know that this fiscal policy, but from a monetary policy stance, it has to be all about where they go with the US dollar.
Talking about the Federal Reserve, Seema, weigh in on this idea of when the Fed has to worry about inflation. Are people getting ahead of themselves when they start worrying? To John's point about 2% expected inflation over the next 10 years.
I think it is. We are certainly in the camp of we expect inflation to be higher this year. We think there's a number of reasons. And as you said, the Dudley piece on Bloomberg sets most of those out very, very well. Now, I think the key thing is, though, again, is that the Fed is likely to look through a lot of those things. Inflation, which is created by supply shortages, which I think is going to be the key driver for this year, is something that they're likely to look through. And we've already heard time and time again that the Fed wants to give inflation a chance to pick up, give the economy a chance to run hot, and for the labor market to be able to push unemployment rate down to the pre-pandemic levels. So to me, this is almost a moot point. We will see higher inflation, but the Fed isn't going to act for certainly a while longer. But what we do need to hear from the Fed over the progress of this year is some additional clarity. What is that level? Is it 2.5%? Is it higher? And what length of time are we expecting to see? What do you want to own in that environment, Seema? In the higher inflation environment, it's a kind of standard stuff. It's a cyclical environment. We can only expect higher inflation if growth is stronger. And, I heard you guys talking earlier about the taper tantrum, and it's so true. Equities did really well, right, because it's a growth story. So if we're looking at stuff like commodities, which is keyed into growth story, other cyclicals, financials, these are the assets which are really going to perform well in that kind of environment.
How concerned are you about big tech and the valuations there if we do get higher rates and we do get a Fed that starts to back away slowly?
Yeah, and I have to say that's one of the main questions I get from clients these days. We do like big tech, and the question mark is, of course, those high valuations. And the thing we'd say is that, look, this is a fundamental story for big tech. You look at any company through this pandemic that has successfully pivoted, it's because they've utilized technology. And even after the pandemic is over, we're not going to go back to a time when technology isn't an essential part of the business. So cloud computing is the way forward. And big tech companies, not all of them, but the ones that have really invested, should continue to perform well. Now, I don't think we should have as large an allocation to big tech as we did, because as you said, as you get through the inflationary environment, you'll see higher bond yields, and maybe at some point the Fed will react. But I think it deserves to have at least a key portion of your portfolio. Last couple of months, just started to hear a little bit more about the FTSE 100. Seema, where does the FTSE sit in an international portfolio right now?
Great question.
Yeah. We have, I haven't liked the UK for a really long time because of the whole Brexit saga, because there's so much uncertainty. Tom.
Seema, thank you.
Think going forward, with the vaccine news actually rolling out quite well, I think there's a lot of opportunity in the UK. And also, from a relative value standpoint, the UK looks pretty attractive to many other regions. So to us, I think this is the time to start actually gradually increasing your exposure to the UK.
See Michelle of Principal Global Investors. Thank you. Tom, do you want a final word on that? Are you done?
No.
You're finished?
No, but seriously, I'm glad you brought it up because the FTSE, folks, is a beast unto its own. John, when was the last time we paid any attention to the FTSE?
We haven't for a long time, largely because of Brexit, but since the end of October, it's up
well
about
said.
17%. And when you look into the individual weightings, at the top, Unilever, AstraZeneca, HSBC, but a lot of it's the miners, it's energy, it's the commodity play, deep value on a global cyclical recovery.
John, stat of the day, and folks, this is from Chris Verone, who you know I adore, just brilliant at trend-based technicals. The Russell 2000, John, is 40% plus above its 200-day moving average. That's never happened before.
It's unreal.
The rally
we've seen in small caps, Lisa, has just been absolutely tremendous.
Can we call this the Biden rally?
It started before Biden took office.
I think you've got to call it the Pfizer-BioNTech Moderna rally, right? I mean, come on.
That's fair. Yeah,
I think that's what we've got to call it.
This has to do with the reopening and pricing in the end of the pandemic and the idea that these are the companies that have been least loved, and yet they also are being helped by a lot of the backdrop of stimulus. It makes a lot of sense as long as we end the pandemic.
The fiscal stimulus plan certainly plays into the reflation theme, though, Tom. And that aspect of it, I guess, is somewhat Biden-esque, if you want to call it that.
I'm just saying there's a moonshot. Look, J.P. Morgan, November 6th. 3 days later, we figured out Biden was going to win.
Yep.
Boom. Up go the banks.
Do you remember when the blue wave wasn't what people wanted for about 5 minutes? It was all about divided government, and then about a month before that, it was the blue wave, and then a month afterwards, it was the blue wave.
Gridlock was good.
Doesn't that tell you something about investor biases?
Do they do this in the United Kingdom? Are they like, if Keir Starmer wins, we're all going to die?
Well, they kind of did that with Mr. Corbyn, formerly of the leader of the Labour Party. It was that kind of tone. But doesn't it tell you something about behaviour right now, just the bias?
Exactly.
Yields up bullish, yields down bullish.
Bullish.
Whoever wins bullish. Vaccines here. We reopen bullish. Equity market likes what it hears.
The VIX comes in nicely, 20.49.
Futures adding 12 points to the S&P 500. We're up a third of 1%. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. House Democrats used dramatic video of the storming of the Capitol to begin Donald Trump's second impeachment trial, but the prosecution is far from winning enough votes. Today, impeachment managers will make their opening arguments. They'll try to convince the Senate to convict the former president of encouraging a mob to disrupt the election count by Congress. To do that, they'll need 17 Republicans to cross party lines. California has now passed New York to become the state with the largest number of coronavirus-related deaths. More than 45,000 people have died there from the illness. California's averaged 433 deaths a day over the past week. General Motors posted better than expected earnings in the fourth quarter. That was due to strong performance by GM's trucks and SUVs. But the automaker's forecast for this year missed estimates, and GM expects there to be a short-term earnings impact because of the global shortage of semiconductors. And Coca-Cola posted fourth quarter sales that beat expectations. That gave the soda maker a boost after nearly a year of global lockdowns at restaurants, amusement parks and stadiums. Meanwhile, Coke has reinstated guidance. It sees organic revenue growth in the high single digits this year. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Bloomberg is your best source for earnings, news, and analysis. On Wednesday, GM CEO Mary Barra and Coca-Cola CEO James Quincy. Following their company's earnings announcements, this is Bloomberg.
women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
Start your mornings with Bloomberg Surveillance. Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
This is under the radar.
This equity market's looking good.
You heard it first here on Surveillance.
The conversations you need to hear.
Always going to be fascinating here, particularly the view forward.
The business team you love to watch.
John, I would wrap into your lousy data check.
Have I got a deal with you for the rest of this year?
This is what I do to keep you two apart.
Live from 6 to 9 a.m. starting February 16th on Bloomberg Television.
Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Help you when you're pushing policies that show you believe in people, that you want to empower people, so they can contribute and succeed. And when you have policies that we believe will stifle people and keep them from realizing their potential, then we'll oppose that. And that's what we've done with every president.
Charles Koch there of Koch Industries, the chairman and CEO. From New York City this morning, good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Your price action this Wednesday morning shaping up as follows. 12 minutes away from a CPI print in the United States of America. Just a little bit of a lift on Treasury yields, up about a basis point and change to 1.1706%. The FX market, a little bit more euro strength, just a little bit. Euro dollar 120.126, up almost 0.1%. And that's been a story, hasn't it, Tom, over the last 3 months? An equity market that just gets back into rally mode, clicks back in, up 13 points on the S&P. We're up about 1/3 of 1%.
All the different back and forth. A good time to speak to David Rubenstein, a host of peer-to-peer conversations. You know him, of course, from Carlyle Group, and way too brief a conversation this morning on radio and on television. David, your conversation on peer-to-peer with Mr. Koch is exceptionally important. It's not only the think tank advocacy of the Koch brothers, it's the actual action they've done within conservative America. What do they do after the debris of Donald Trump? Are they going to support Trump, or are they going to take a different path?
Well, I think it's a mistake to think that Charles Koch and his supporters were really Donald Trump supporters. He was not a Donald Trump supporter. He never actually gave him any money, and he didn't ever meet with him. He basically had the view that he has certain principles, Charles Koch, which is to empower people. And that's what he really has been doing in his company and his philanthropy. He's now 85 years old. He's still running the largest privately owned company in the United States. Mm-hmm. And he says that the biggest mistake he made was getting involved in partisan politics in 2010. He was vilified for that. He got out of that. And now he's basically spending his time giving away his money and still running his company. And his main point is empower people at the bottom. Don't rule from the top. Let people get their potential by realizing their potential from working from the bottom up. And that's the principle, he said, that enabled him to take a company with $12 million in revenue to a company with $120 billion in revenue.
I can't say enough about it, folks. I'd also point out my beloved tendency that the Koch brothers own the Dixie Cup franchise, which, of course, is part of all of our childhoods. David Rubenstein, there's a libertarian streak here. Does Mr. Koch believe the libertarian tone can survive within the new Republican Party?
You know, he didn't really address that because he tries to not be involved in partisan politics. In fact, he said to me, to my surprise, I've never been to the White House. I've never gone there because I only want to care about substance, and people just want me to come for show. I don't really want to get involved in politics, so he's never actually been in the White House and never met a president of the United States in Washington, D.C. He doesn't come to Washington.
David, it's fascinating your role in interviewing him as a representative of Wall Street for so many years, co-founder of one of the biggest private equity firms out there. Wall Street used to lean Republican. Does it still?
Well, I'd say that Wall Street traditionally probably was more Republican than Democratic, but I'd say that's changed in recent years as private equity firms and hedge funds have become more important, and many of them are populated by people who tend to be Democrats.
So going forward, given that, does Wall Street, the people who you speak to, your peers, do they support this $1.9 trillion support package or stimulus, however you want to frame it, that we're hearing about and that's getting formed in Washington, D.C.? Do people think it's too much?
I wouldn't say I've done a poll, so I can't really say, but I would say generally people are comfortable that you have somebody who seems to have a plan, who doesn't bounce around as much, and he has a team that seems to be cohesive. Whether it's 1.9 or 1.5 or 1.4, I think is less relevant. But I think almost everybody in the business world thinks something above $1 trillion is necessary in order to keep the economy going. It's clear that the virus isn't going away that quickly because of the vaccination problem. So I think most people think we need another stimulus. Who knows? Nobody really knows. The president says he doesn't really know whether it's 1.9, 1.5, but it's certainly more than $1 trillion.
David Rubenstein, you are truly legendary in capital intelligence and in capital formation. We now have a frenzy in SPACs. Andrew Ross Sorkin writes about it in Dealbook today. The radar up on this SPAC craze. Are you going to do a SPAC or is it a frenzy?
Well, I'd say it's probably a phenomenon that's not going to go away. Like anything that happens, you can get excesses, and every SPAC doesn't work out. But I don't think it's something that's going to go away anytime soon.
David, we appreciate your time today. Thanks for joining us, sir. Wonderful interview, as always. David Rubenstein there. Coming up on this program in about 8 minutes' time, we will have CPI. Michelle Meyer joining us, Bank of America Securities Head of U.S. Economics. Tom, reaction to an inflation print just around the corner.
It's a big deal. I'm sorry. Basically, you know, it's the old line. This works great on radio, John. There's two lines, okay? Service sector line has come down. Goods producing inflation has come up. And they both touched. John, the phrase we use in economics is the two lines are kissing right now on inflation. And you really wonder which direction they're going to go in.
Factory gate prices, I think the focus, Lisa, overnight in China, starting to get a lift now. Manufacturing's been buzzing now for about 9 months. The commodity story's starting to pick up. And my question is really the read across from the factory gate prices as they increase to CPI in America and whether we start to export some of that inflation out of China to elsewhere.
Yeah, and it's interesting that this is coming from the industrial side. I mean, even in the Chinese data overnight, we didn't see the similar pressure in consumer prices elsewhere. So there is this feeling that it isn't a consistent gauge. What I'm watching for going forward is signs that there is some sort of structural increase in inflation. How do we determine whether it's transitory, John, to use your word? How do we determine whether there are longer lasting strains here that mean that this time is different?
Well, it's up to the central bank. They like the word transitory because that just gives them something to hang their hat on. Tom, this is the way it works. They say transitory, and that just means that's an excuse to look through this. I mean, by definition, everything is transitory, right? In economics,
it comes down to wage.
I mean, really think about it. By definition,
life is transitory.
It is transitory, of course. I mean, the cycle is transitory by definition. It comes, it goes.
I'm
you have the
go
upswing,
down, John,
and you have the contraction afterwards.
John, back to the study of the United Kingdom in the 1930s and 40s. It's all about wages, the great fear of wage deflation. No, we're not going to see that. But do we see legitimate wage and benefit inflation forward? I don't know how you do that with 12 million bodies out.
Look, bottom line, Secretary Yellen was Chair Yellen and learned a very difficult lesson that you can take unemployment down a whole lot lower than they did before you have to worry about inflation. They learned a difficult lesson because, as John Riding of Breen Economics mentioned a little bit earlier this morning, those on the bottom rung those that really go through it in this economy, they get hit first in the downturn, and they come out last often as well. You have to run the economy really, really hot to bring everyone back in and make sure that the only deficiencies left in the labor market, the only slack, are structural and not cyclical. And the Fed moved too early last time around in the minds of many people, including in the minds of Chair Yellen. She is now Secretary Yellen, and determined, Tom, not to make the same mistake twice. And I imagine Chairman Powell's on the same page.
There's the same analog here to the Bank of Japan a zillion years ago. They made a mistake, and they've never forgotten it.
From New York, more still to come. The data just around the corner. Vishal Mayer of Bank of America Securities, head of U.S. Economics, joining us very shortly. Futures up 12. We advance a third of 1%. This is Bloomberg.
一个就是我们看中它的那个品牌吧，它品牌就是说东西比较干净嘛，然后比较方便的话，味道也还可以的话，我觉得我会考虑吧。外卖的话呢，也是一种方式，就是品种会多一点嘛，各有它的特点吧。
这个车的话，目前我们是通过这个手机 APP 上，就手机扫码，然后微信和这个支付宝扫我们这个车上的这个二维码，大家就会进入到一个小程序的这个界面，然后呢就可以选购自己喜欢的商品，然后付款之后呢，柜员会打开。
支付成功，请拉开右侧车门取货，并关紧柜门。
然后我们会取餐，然后完了之后呢，就把餐这个柜门关上，然后整个购买的这个流程就会结束。
柜门已打开，请取出货物并关好柜门。
Do you have any interest if President Biden invited you just to come and take a tour of the White House just to see what it looks like?
If he wants to talk about how to empower people, boy, I would be there in a nanosecond.
This is the 1980s all over again, to make sure that we keep our hands firmly on the driving wheel.
I do not see demand coming back to the pre-COVID level anywhere earlier than the end of 2022.
If that happens and we see a demand recovery, then I think the market can absorb it.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
CPI data about 10 seconds away from New York City this morning. Good morning. Alongside Tom Keene and Lisa Bravitz, I'm Jonathan Ferro. Equity futures with the lift, your market at an all-time high. 8:30 Eastern time. The data dropping any second. Let's bring in Michael McKee. Hey, Mike.
Good morning, John. Well, it's been a long time since the CPI was the focus of Wall Street, but it is now, and we're looking at a 0.3% increase for the month-over-month number, which is just what was forecast by the economists surveyed by Bloomberg. Gasoline pushing up the headline number, up 7.4%, accounts for most of the gains in that index. The core rate was unchanged in January, they say, and the forecast was for a 0.2 rise. So that suggests that we are not seeing a major inflation problem at this time. Apparel, medical care, shelter, motor vehicles increased during the month, but recreation, used cars and trucks, and that's always a big one in here. Airline fares, no surprise there, and new vehicles declined in January. So the headline up 1.4% on the year, and the CPI core rate up 1.4% on the year. That is unchanged for the headline, and it's a 2-tick down number for the core. So no inflation yet, but of course it's coming.
Yeah, it's coming. Who says it's coming? How can you tell in the data that it's coming?
Well, what you want to look at is not this month, but you look at March, April, and May, when we had deflation, when the CPI was below zero each month. Those are going to fall out one by one, and so the percentage gain from the bottom is going to be much bigger.
So we're going to get inflation just because the calendar's moving on?
Yes, Tom.
Is that a reason to be afraid?
When I came here years ago, you said there will be no math. But there's going to be math.
There's going to be math. Math will be had.
And the argument that the Fed is making, and you can bet that Jay Powell will probably address this afternoon.
Is just math?
This is just math. It is temporary.
There we go.
However,
seriously,
Bill Dudley is out with a nice, piece on Bloomberg Opinion today, suggesting there are reasons to be worried about inflation. And he goes where Larry Summers went. He says that with the big stimulus coming, and with the possible rebound in demand as the pandemic goes away, we could have an inflation problem down the road.
Mike, you know, it's interesting that you mentioned that. Bloomberg Economics came out and said that the $1.9 trillion stimulus would be short-term or transitory inflationary, not necessarily long-term. And then you have people saying that a confluence of events like Bill Dudley will lead to higher inflation. When you survey your peers, your economists that you speak to, what's the consensus right now?
Well, the consensus is that we are going to see a temporary spike in inflation. The Bloomberg forecast is that in the second quarter, the year-over-year rate goes up to 2.7%. But then by the third quarter, it falls back to 2.3%. That puts it comfortably in the range that the Fed's been talking about of 2 to 2.5%. The question then is, does it stay there? And that's going to be the hard thing to know until we see what we get out of stimulus and how soon the pandemic ends. But the Fed is going to let it rise. And so it's really less a question of do we have inflation as how fast and how far does it go.
I mean, the yield market moving. Michael McKee, thank you so much. We're going to move on here just because of a tight schedule. John Farrell, there's no question about it. You see yield come in.
Yeah, small downside surprise on a year-over-year figure. Looking at core as well, small downside surprise. And what happens? Bonds get a bid. Yields roll over just a little bit. One thing I can't reconcile, work this out with me, and if Mike's still there, maybe he wants to weigh in as well. The complaints about this package is that it's short-term, that it's all just demand-driven stimulus, and that it doesn't invest in public investment and longer-term economic outcomes and all of that good stuff, then why are we sitting here worrying about inflation persisting and persistent inflation forces over time? That's just a short burst of demand. People re-engaging back in the economy, Mike. So reconcile those two things for me. What are they worried about? They complain, one, that it's calibrated the wrong way, but also, two, that we should be worried about inflation.
Wall Street is looking for those reasons that Bill Dudley lays out today that go beyond the stimulus package, the rebound in demand, the possibility that we're going to have supply shortages as people come back, not just of things like semiconductors, which we're seeing in the car industry now, but people want to go out to restaurants. They want to spend money, but the restaurants are closed. So there are going to be some price pressures going forward, and the question is, do they persist? And we really won't know till we know the size of the package and how fast that gets out.
Michael McKee, thank you so much. Michelle Meyer joins us now with Bank of America, and they've done some brilliant math. We went through it with her colleague Ethan Harris a couple days ago. Michelle, 4% GDP plus 9% GDP equals 13% GDP. You've got that big fiscal pop. Good morning, Professor Summers, up against inflation. Which breaks? Do we break inflation higher, or do we get a fiscal job done?
So I think the way that we're thinking about it is certainly in the near term, there's a big push into the economy as a result of stimulus. There's a lot of money sloshing around there already, and more is to come. And that will generate higher consumer spending. And as Mike outlined, I think quite clearly, for certain industries, there could be supply constraints, and that can exert upward pressure. But to me, to understand whether or not it's a sustainable turn higher in inflation, there's two critical components. One, inflation expectations, right? That will move this transitory inflation shock to something more permanent. If people reset expectations and if pricing power picks up on the business side, and again, if people are willing to spend more because they have this cash on hand, and that kind of feeds on itself. The other critical factor is the health of the labor market. To the extent that this demand push actually helps to also heal the labor market faster, bring the unemployment rate down more quickly, that will provide a more, again, persistent income support for the consumer through wage growth, through labor income.
We keep
Well,
we keep referencing this Bill Dudley column, and I want to get your view on some of the specific points within it, what he's saying will cause higher inflation. One of them is that he sees demand picking up at a time when supply is still reduced. You've got restaurants that have gone out of business, a lot of small businesses that have not recovered. So given the fact that there are fewer establishments out there, they'll be able to charge more since there'll be an influx of demand. Do you see that as a potential driver of inflation?
Sure. I think that's a very fair argument that you have an imbalance where demand for certain activities picks up very quickly and you don't have the supply. We saw it actually in the reverse on the goods side. I mean, think about back in the spring and summer when demand was picking up impressively for autos, for household appliances, for electronics, and there wasn't enough supply initially, and that created this kind of one-off level shift higher in prices on goods, which are now reversing once supply has returned. So this supply-demand imbalance should be somewhat temporary, right? The demand will pick up for something like restaurants, which was cited, and then capacity will come back online over time, and that will create a little bit more of a ceiling on the price pressure. So again, to make it persistent, it has to be resetting inflation expectations and driving much stronger labor fundamentals as well.
The only question that matters really, Michelle, for market participants, will the Fed be bold enough to look through that burst? That burst we all anticipate at some point later this year. Do you think they will be?
I do. I do. I think certainly the base effects in the spring, they're ready for them. They've been talking about them. As Tom and Mike were just talking about, you know, it's just simple math when you look at the year-over-year comparisons. And I think what the Fed's going to do, rightfully so, is to look at the bottoms-up analysis of inflation. Where is inflation picking up on a sector basis? And given that, can they make the argument that it's a short-term supply issue versus something more persistent? If they get a turnaround and a notable increase in some of these more trimmed mean measures, or something like shelter, which is more a function of the business cycle, then they might start to anticipate a higher trend of inflation. But they're going to be looking at the components to understand whether it's transient or not.
Tom, that's what's amazing about this discussion right now. The Fed is telling you what's going to happen. And it's probably going to happen. The base effects will kick in. This is what happens when people will re-engage with the economy as well. And they're also telling us what they will do when this happens, yet we are still going to be having the same conversation for 9 months.
This goes up to the joke I made earlier about the inflationistas. Michelle Meyer, I turn to the ECI, the measurement of wages and benefits. And the key thing here is, how do you have wage inflation with Heidi Shierholz at EPI saying 9 million bodies are out of commission? And if you extrapolate out a no-pandemic boom, it's more like 11 or 12 million bodies out of commission. Where does wage inflation return?
So I think that it's very hard to understand the wage dynamics right now. ECI, as you mentioned, Tom, is a preferred measure. It's better in real time than average hourly earnings. But there is no perfect measure right now because there's been such dislocations to the labor market. And you have these compositional issues where the lower paid individuals have experienced more job cuts. And as a result, you've seen this shift in terms of aggregate income or aggregate wages. So I think in the meantime, we just kind of have to wait it out until we have a more comprehensive and full, broad-based labor market recovery to properly understand these wage dynamics.
Michelle, great to catch up, as always. always, Michelle Meyer of Bank of America Securities, head of US economics, telling you what's going to happen this year.
Did you see how she
telling
did
you
that?
how the Fed will respond to what's going to happen this year.
She was so polite in telling me I didn't know what I was talking about.
Hey,
Did
Tom,
you see she finessed that?
I'm
She
used
was
to
like
that.
lights out.
We've worked together for a long, long time. It's not unusual.
It was lights out.
It's
We've
not
gone
unusual.
from 2.75-ish. We rolled over in the pandemic down to 2.5. And as she says, seriously, who knows what's going to happen?
The Fed is seriously telling you they're going to look through it.
Yep. No question about
I
that.
mean, the message is loud and clear.
There's a question, though, and this is, I think, one thing that we're going to hear more about, which is at what point do they start to worry about the consequences of higher asset prices, much higher, without some sort of structural shift higher in base inflation? I don't want to be gloomy. No, come on. I'm just going to say this is the unknown, right? I mean, at what point do they start to see froth?
I found one of Lisa's friends, terminal subscriber, wants me to read this out, but doesn't want to say who it's from. The Fed couldn't see inflation with the Hubble telescope. There you go. Is that one of your friends? They're pestering me now instead of Tom. That's the situation.
Thank you.
Okay.
Keep
Thank
fighting.
you. Thank you. You know who you are. Thank you.
John,
Lisa's
equities
friends.
lift.
Record highs, Tom, back on track at the opening bell a little bit later this morning. Coming up on this program, Mary Barra sitting down with David Weston, the GM, Chairman and CEO. From New York City this morning, good morning. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. It's the second full day of Donald Trump's impeachment trial in the Senate, and House impeachment managers will make their opening arguments. They want to show that the former president encouraged a mob to storm the Capitol. If all 50 Democrats vote for conviction, the prosecution will need 17 Republicans to cross party lines. Meanwhile, Trump's defense team says that Democrats are just trying to quash a political rival. Donald Trump has asked Palm Beach to let him stay full-time at his Mar-a-Lago resort. A lawyer for the former president says he should be allowed to live there since he's an employee of the private club. Local residents, though, have argued that Trump shouldn't be allowed to live at the resort permanently because of zoning rules. A House committee has advanced a portion of the $1.9 trillion stimulus package that includes a minimum wage increase. The Education and Labor Committee approved raising the minimum wage to $15 an hour. Republicans objected. They cited a Congressional Budget Office study saying that more than doubling the minimum wage would cost 1.4 million jobs. And the controversial former pro football quarterback Colin Kaepernick has joined the SPAC frenzy. Kaepernick is co-sponsoring a blank check company that will look for a business in the consumer sector. He hasn't played in the NFL since 2016. That's the year he launched player protests during the national anthem to bring attention to racism and police brutality. And in the latest episode of Bloomberg Studio 1.0, host Emily Chang sits down for an exclusive interview with Microsoft's CEO Satya Nadella. One of the topics that they discussed, antitrust issues facing big tech companies.
You need to have a business model that really is aligned with the world doing well. I think that's what's being litigated, right? Which is there are certain categories of products where the unintended consequences of the growth on that category or lack of competition in it creates issues. And so that's what I think people are all looking at and saying, hey, what's the fix for that? But I don't think big by itself is bad, but competition is good. And every business, in particular the businesses that are large and have high scale, the unintended consequences of your scale cannot be dealt after the fact. They need to be dealt while you're scaling.
That was Microsoft CEO Satya Nadella. You can catch his exclusive interview on Studio 1.0 with Bloomberg's Emily Chang. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Here we are a year later, and that forecast, sadly, hasn't really improved. It's probably moved almost linear. So at the moment where we're at is probably 2023, when we ever get back to 2019 numbers.
Tony Douglas, I like the guy. He is a real operator of airlines, and he's got a great challenge at Etihad in Abu Dhabi versus Emirates in Dubai. There's some real interesting dynamics there. He is on balance of power And of course, Wall Street Week, David Weston joins us now and really goes to the heart of the matter. I can't think of anybody I know on the planet more qualified to talk Fisher Bodies, GM, and all the rest of it. How is GM different now from what you remember growing up in the great state of Michigan?
Well, first and foremost, of course, it was all internal combustion engines. And Mary Barra, the CEO, has now said, we're not going to have that. By 2035, we will be entirely emission-free at General Motors. That's incredibly different from what we knew.
AC or Champion spark plugs? Every house in the neighborhood is like Huntley, Brinkley, or Cronkite. Which was it?
That's an easy one. My father worked at AC Spark Plug. So we had to have AC Spark Plugs.
It's amazing, David. And, you know, I'm a fossil on this. I know you've got 3 Teslas in the garage, but the answer is she hit a home run with that Super Bowl ad. I mean, she hit a home run.
In fact, I'd like to ask her what she's got against Norway. You know, what's her problem with Norway after all? Yeah.
We'll have to see there.
Okay, and now it's our great pleasure to turn to the chairman and CEO of General Motors. She is Mary Barra. Mary, thank you so much for being with us. Good to see you again. Let me start by saying, borrowing from Queen Elizabeth, this could easily have been an annus horribilis for General Motors, given the pandemic, shutting down plants, repurposing to make ventilators, and yet it wasn't. You basically beat across the board to expectations, fourth quarter and for the year. So from the inside, how'd you do it?
Well, I think it was everybody coming together. It really represented the great work and the teamwork at General Motors with all of our employees, our suppliers, our dealers. We all came together to make sure we could keep our employees safe, but then also protect our customers and protect the business. So I couldn't be more proud of everything the team accomplished last year.
As it turned out, your biggest problem was manufacturing enough, particularly those trucks and those SUVs, because the demand came back. Were you surprised how fast the demand came back?
Well, you know, we have a very strong full-size truck and our full-size SUVs that we launched on time last year, even with the pandemic. And I think it speaks to how popular the truck is. We have very different models that reach different segments, and so we've been able to grow share, and we're very proud of our truck leadership.
So, Mary, as you know so well, investors immediately say, what have you done for me lately? So let's look forward now to 2021, what you're expecting. You're projecting a strong year as well, even though you do have some headwinds from things like shortage of chips.
Yeah, we think we're going to have a very positive year in 2021, not only from a financial perspective, but also the continued acceleration of our EV and our AV business. We're really excited that very shortly we're going to be launching the Chevrolet Bolt EUV, which is a great vehicle, and that's days away. And then, you know, later this year we'll be serving the market with the GMC Hummer EV, and then the Cadillac Lyriq comes shortly after that, as well as tremendous progress being made from an autonomous perspective as well. So we're really excited about the year, the growth opportunities that we have in front of us. And so it's a year of execution, and, you know, the issues with chips, this is a short-term issue, and we'll work through it.
Well, is General Motors basically in the same boat as everyone else, or are there things that you can do to get something of an advantage over other automakers?
Well, I think in general, this is an industry issue. Of course, we're working every single day with a cross-functional team to look for opportunities of how do we minimize the impact. So we'll continue to do that. You know, we did provide the guidance with a fairly wide range, and we'll work it every day and provide updates as we go forward.
Mary, as you said, you've got a lot of EV models coming out, including, as you say, the Bolt EUV and the Bolt EV new model coming out. You're investing $27 billion. This is part of a multi-year plan here. As a practical matter, what are the difficulties in that plan? And particularly, I want to talk about supply chains, things like battery cells, some of the lithium issues. Do you anticipate possible problems with supply chains into your battery operation?
Well, I think, you know, we're one of only 2 automakers that are doing cell manufacture in this country. We also are doing a tremendous amount of development on our own and our own GM R&D, as well as partnering with startups and, of course, our joint venture with LG Chem that is development as well as production. So, you know, we're working hard to make sure we have all the cells we need, and we've worked, you know, through the supply base to make sure we do, because we are, as we've talked about, we're accelerating our EVs with 30 by 2025, and, you know, really covering the whole market. So, you know, we continue to work it, but we think we've got a very strong plan.
I did some rough math here. It might be wrong, but basically, if you made all of your vehicles as electric vehicles, you would actually be using more than the total amount of lithium produced in the entire world by yourself. So does that mean we'll have less lithium used, or are we going to find new sources of it?
Well, I think, we're working on securing the supply that we need, but we're also working on development that allows us to use less precious metals overall. So it's kind of a yes and. Both are things that we're working on.
At the same time, when we talk about things like the Bolt EV that's coming out, questions come up of profitability. We had Daimler, a competitor, come out and say by the end of the decade, they will be making as much or more out of electric vehicles as they do off of combustion engines. What's your profitability path for electric vehicles?
Well, we have set a goal for ourselves to have margins from our auto business be at 10%. That's not changing. We don't talk about individual product line profitability, but I can tell you with the progress that we're making because of the work we do with battery development, from our first generation Bolt EV to when we get to Ultium, we see about a 40% improvement, and we're already working on the next generation of our Ultium technology that should take it to a cumulative 60 or more. So, I'm very confident that as we move forward and continue to make advancements, not only in the cost, but in the energy density, that's going to allow us to have margins similar that we have today as we get into the mid and later part of the decades.
How much help do you anticipate getting out of the government? We have a new president now, President Biden, who says he really wants to go to emission-free vehicles in the government fleet very quickly. He says he basically wants to replace them all over a period of time, create 1 million new jobs. Is that going to help a lot your move at General Motors over to electric vehicles?
Well, I absolutely think so. I think understanding EVs, understanding the importance, and really we have to work together. Business and governments need to work together to make sure we have a whole ecosystem that encourages EV adoption. We need to make sure there's the right charging, and that's why the work going on for infrastructure is so important. So we're having regular conversations with members of the administration as well as members of Congress to make sure they understand all the pieces that need to come together to support an all EV future.
Finally, Mary, we all watched the Super Bowl. We watched Will Ferrell, and I guess my main question is, what have you got against Norway? There seems to be some grudge with Norway here.
Well, I think, when you look at Norway, they've had the highest EV adoption, and so I think it's driving awareness. We're really pleased with the ad. It resonated across so many groups, but, especially millennials and how they look at the future. And to drive that awareness, we think is really important. And I'm virtually 100% Finnish, so I have a natural affiliation with the Scandinavian countries, but it's more highlighting what Norway's done and making sure people understand that EVs are a very important part of our future.
And I'm a quarter Swedish, so it was satisfying to know that Will Ferrell actually ended up in Sweden at the end of the ad. Thank you so much, Mary. Always great to talk with you. That's Mary Barr. She is chairman and CEO of General Motors. Tom.
It's not luck. That was a brilliant ad, and I've noticed a university in Norway has come out with a spoof on it made by the kids and the college president. And Audi of Norway, I believe yesterday, David, released one of the Game of Thrones actors taking a direct rebut, and it's about adoption of EV.
And have you seen the Twitter exchange between the Prime Minister of Norway and Will Ferrell? Yeah. Where it said, don't order 5 million pizzas and anchovies, order 5.4 with pineapple.
It's got to be the biggest effect a Super Bowl ad in ages and ages. David Weston, thank you so much. Lisa, let's wrap up where we are right now. I mean, this is way too much stock market talk for Weston, but futures up 19 right now.
Yeah, we are seeing a bit of a lift, but really what I find interesting is the bond market's reaction to the CPI data.
In they come.
Where, you're seeing yields lower on the day. There is really no signs that we're getting runaway inflation in any way, shape, or form. It is still a hope, and I think this is fascinating, especially as people start worrying about overheating. And I do want to go back to the Bill Dudley column in particular, and something that he talked about, which we did not discuss, and this idea of an inefficient reallocation of resources, this idea of what happens when all of a sudden people don't go back to offices, and we have a rejiggering of the way that the economy and the business world runs. How much waste does that produce? How much less productivity, and how much does that itself lead to inflation? All of these theories not seen at all in the actual data. We are still in the pandemic, yes, but you have to wonder, is this time really different? Tom?
And as John Riding talked about earlier, the productivity mystery that's out there with technology applied across all of us as well. Lisa, I've got to note gold, $18.52 an ounce, and we've been remiss. We haven't quoted Bitcoin nearly enough this morning. I'm going to call it level at 40. 46,000.
Yeah. Where are you on $80,000 watch?
No, I'm not on 80,000 watch, but the heat of the debate is tangible. I mean, it just won't go away, for and against. There's just no debate about that.
And JP Morgan said that it would be unlikely for another big tech company or another big corporation to come out with a similar move as Tesla did to sort of accept Bitcoin as a payment, but also invest some of their reserves, more importantly, in the crypto asset.
It also leads today in Balance of Power with one David Weston coming up on the impeachment. I believe, Lisa, the start off, there's 11 a.m.-ish or so.
Well, and at the heart of this really is the question of the Republican Party and who's taking the leadership of it and how much will the Republican establishment repudiate President Trump voting for impeachment. Unlikely they'll get the votes, but still the fact that this vote is going ahead is politically important.
Equities, bonds, currencies, commodities. Let's go through it right now. Futures up 20 down. Futures up a 140. And we're not on the 4,000 watch on SBX, but we're there. The VIX gives me no information right now. Yields come in, as Lisa mentions, the 10-year down to a 1.14%. Coming up, Satya Nadella. This is going to be interesting to say the least with Microsoft, their chief executive officer, an extraordinary cash build, an extraordinary success across his tenure. And then there's the now what for big tech after a spectacular 2020. So we look forward to that. You'll see that in the 5 p.m. hour later today. On currency markets, some dollar weakness, maybe off of what we've seen. And, of course, Chairman Powell, the marquee speech this afternoon about 2 p.m.-ish. Please stay with us on radio and on television. This is Bloomberg. Good morning.
These solar arrays that we're going to install are going to be about half the size of the existing solar arrays that we have on the International Space Station. But because of the advances in technology over the years, they're going to provide about twice the power in just half of the area that the existing solar arrays cover.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
From New York City for our audience worldwide, good morning, good morning. The countdown to the open starts right now. This Wednesday morning, equity futures with a lift up 19. We advance 0.5%. Let's get straight to it. We begin with a big issue. With equity markets at all-time highs, Chairman Powell taking center stage.
This is a very, very supportive environment for risky assets.
It's all kind of boils down to for how long we're going to see this very accommodative monetary policy.
We could see, inflation run hotter. If inflation does turn up.
We don't see any reason for Powell to change the narrative.
We'll let the economy run hot.
How do the markets adapt?
Valuations are high. Usually valuations do mature.
Have to be worried at these levels, no question about it.
For now, I would just shrug it off.
Both the Fed and fiscal authorities with their pedal to the metal.
They're going to stay the course on monetary policy.
At some point, the Fed is going to have to taper its purchases.
Markets aren't yet pricing it in.
In the end, is going to be comforted by the Fed's promise.
A much hotter economy.
Let's bring in the Bloomberg team for more. Michael McKee and Kelly Lyons. Mike McKee, 5 hours away. Chairman Powell.
Yeah, John, but if the markets are worried about the economy running hot, it's not right now. We got a downside surprise to inflation with the headline number coming in up just 0.3%, which was what was forecast, but only 1.4% on the year. The core rate was supposed to go up. Instead, it's flat. That leaves us at 1.4%. That's a 2-tick down for the core rate. Holding everything down, services, restaurants, bars, things like that, still closed, gyms closed, services prices unchanged on the month, up, not up at all, completely flat. The headline gains led by apparel up 2.2%, tobacco 1.8%. But two of the biggest categories are going in opposite directions. Housing up just 1/10. That may be a sign that maybe we're seeing the end of just 1/10. That may be a sign that maybe we're seeing the end of the housing boom, the move to the suburbs housing boom. Gasoline, though, up 7.4%. That illustrates what's going to happen and what Wall Street is really concerned about. Gasoline prices, like everything else, fell hard last year in the spring when the virus first hit. That deflation is going to fall out of the numbers. The percentage increase off the bottoms will push inflation higher. The Bloomberg survey of economists says to 2.7% in the second quarter. So this afternoon, Jay Powell gets up to hammer home the idea that's just going to be temporary. The Fed will look through it. Inflation will come back down. The yield curve has steepened and inflation expectations are up. That's okay with the Fed. They kind of want that, but they don't want inflation ideas getting more embedded than they are.
Mike, they're telling us what's going to happen. They're going further. They're telling us what they will do when it's going to happen, and yet still we get the op-ed pieces like we got from the former New York Fed President, Mr. Dudley, this morning. What's your take on that?
Well, there are a lot of reasons why people are saying we might get inflation. Dudley lists like 7 of them this morning, including a return to demand and supply shortages. You want to go out to dinner and there's no restaurant open, or you want to build a car and you can't get semiconductor chips. But those things will work themselves out. The question is how fast and how big the stimulus package will be. Will there be a lot of money going to consumers, sitting in their bank accounts, that all of a sudden gets spent when people feel safe? That's the real debate. Nobody knows the answer.
Mike McKee, 27 minutes out from the opening bell. Equity futures with a lift. We could have an all-time high at the open. In the bond market, the bid is back after that downside surprise. Kelly Lyons, the bid is back. Yields are lower by a couple of basis points.
Yeah, but that has not been the case over the last several weeks. Bonds lower, yields higher has been the story as this market continues to bet on that stimulus that Mike McKee was just talking about. We are seeing global equities rallying for an 8th day. The MSCI All World Index on its longest winning streak since November. And here in the U.S., it seems all this market really needed was to catch its breath for a moment, because after small declines in yesterday's session, the rally is rolling on. If current gains in futures trading hold, it would be more than enough to make up for yesterday's minor losses. And as you said, would see the S&P 500 open at a fresh record high. If that holds, will be the 9th new closing high of the year thus far. And we've only had 27 sessions, John. Then outside of equities, we know that the commodity complex has been getting a bid from this reflation story. as well. Over the last week, oil prices up more than 5%, a barrel of WTI now trading above $58. And Dr. Copper getting a nice lift over the last 5 days too, up about 6%. Both it and gold have had just one down day in the last 5. And note the Philadelphia Gold and Silver Index is up about 3% on the week, maybe a bit of inflation hedging going on there. But of course, we know that we did get that downside surprise on CPI this morning, John. That has yields coming in a touch, but really over the past 2 weeks, it still has been a higher yield story, especially on the longer end of the curve. The 10-year yield up 12 basis points over the last 10 sessions. It's been up in 9 of those 10 sessions, and the 30-year yield, of course, is below that 2% threshold it crossed earlier this week, still sitting around 1.92%. And of course, we're going to get a 10-year auction later today, $41 billion worth of issuance coming onto the market, and $27 billion auction for the 30-year tomorrow. So we will see what kind of demand those are met with and how it shows up in the bond market, John.
We're taking down some serious supply. Kelly, thank you. $41 billion worth of 10-year maturity, 10-year debt in the United States. Unreal. And from Amiga's Peter Cicchini seeing inflation as a risk for the first time in a decade, saying fiscal stimulus could overheat both equity markets and the economy. And if the latter happens, the Fed will need to raise rates sooner than it's guided. A cataclysmic occurrence for markets and the real economy. Peter joins us now for more. Pete, you know I love catching up with you. Here's the stage. It's said as follows. The Fed says X, this is what will happen to inflation. They say Y, this is what we will do. You think they'll do something different. Why, Pete?
Well, you know, it's largely a matter of severity, right? They're setting a path, and they think inflation will be above 2%, and they'll tolerate it, and they're telling people that. I totally agree with you. But what if it's worse than that? I mean, the reason why, and you know I've been talking for a long time, you know I haven't thought inflation was going to be in the cards for a long time. It's been a Fed story, it's been a China story, and it is still a China story, clearly. We've been importing deflation from China for a while. And in fact, I think we're going to start to see some reinflation coming to us from China. We're seeing that in copper. We're seeing that in oil. But now it's a fiscal policy story. And unfortunately, I mean, I hate to say it, I don't really trust the prudence of politicians to get it right. We're seeing a $1.9 trillion package this time, which is giving $1,400 checks to households that are making roughly twice the median household income. We see a savings rate into the end of last year that was at 13%. That's going to do nothing but go up. And I think Mike McKee just mentioned it briefly at the very end of what he was talking about. That is going to get released into the economy when the pandemic ends. And so the question is, even if it's temporary, which I think it is, and I wrote that in my note, how temporary is it? And by the way, that assessment is very difficult to make during that time, whether it's temporary or not. We know it ex post. But during the time it's happening, it's much harder to gauge. So the question is, what does the Fed do? And the Fed tends to react to inflation when it accelerates in ways they don't expect. So my thesis is it may accelerate in ways they don't expect because of this fiscal impetus. And by the way, maybe we even get another stimulus package after that. Who knows?
Well, Pete, here's the issue for me. Yes, with hindsight, with perfect hindsight, we can make perfect moves. I get all of that. But if you can assess what's driving the price pressures, you can assess whether it's durable or not. They should be able to do that, shouldn't they, Pete? And if it's a short-term blast of demand-driven stimulus, that's likely to fade. The base effects, they're teeing that up already. They're kicking in the next several months. That's going to fade. What is it about price pressures that you expect, that you think will be durable?
Well, again, it's number one, it's the amount of, even if it's temporary, it's how severe it is to start. Because the more severe it is, the more likely we are to see consumers demand higher wages. So it's how the severity of a temporary surge impacts future expectations. And again, that's really tough to gauge. And we've seen it during times in history where inflation, which just starts to feed on itself in ways that we don't expect. And that's the big risk here. So that's why I'm open to inflation being something that could get the Fed to hike. And by the way, the expectation is so strong that the Fed will not hike no matter what. Even a little bit of a hiccup away from that guidance could be all it takes to derail not only the real economy, but also obviously the markets, which to me, as you know, I think we're perched up in the highest branches in the tree, which are always the weakest.
So what do you want to own, Pete?
Well, you know, I still do like owning gold. I have for some time. It's been a better call at times than others. I actually, in the near term, I do like owning energy stocks because I do think we're going to get that impulse in inflation, which investors are going to read. as something less than temporary. And I like owning commodity stocks. So I do like, actually, for the first time in a long time, owning some of the cyclicals, not because I think we have this incredible recovery coming that justifies prices, but rather because I think the equity markets are going to read it wrongly, and those sectors are going to continue to benefit just as small caps have.
And Pete, just finally, how are you looking to strip out the rate-sensitive parts of the portfolio? What are you focused on at the moment, if this is indeed what you're looking for in the next 12 months?
Yeah, well, I'm not sure I'm going to answer the question directly, but I think, one of the key points is that we're not going to see the kind of steepening that we have historically for a number of reasons, right? Number one, we're at zero, and so you can't get much more of a bull steepener. And if I'm right, and the risk is that the Fed could actually change its stance on rate policy, then you could get a bear flattener, and all of this, frankly, is to me not very good for the banks who obviously lend on a spread.
A contrarian call, Pete. Great to catch up. Good to see you, sir. Come back soon. Peter Cicchini there on this market, on the Fed, on inflation, and what he thinks will happen in the next 12 months. Crystal ball type stuff, but an argument nevertheless. In the equity market, up by about 20 points on the S&P 500. We advanced by about 0.5%. At the market desk with your movers is Abby.
John, let's start out with one of the big stock movers on the day, adding to that risk-on tone. And of course, I'm talking about Twitter. Shares are soaring in the pre-market, up about 9%. They did beat revenues, which jumped 28%, driven by digital ads. Daily active users were up 26%, but that was a small miss of estimates. So they actually added fewer users than expected. They also see signs of slowing growth. Nonetheless, investors want in on this stock, a record high, poised for a record high on the open, and a 7th up day in a row. Turning to some other earnings winners on the day, we have Coca-Cola trading higher after the CFO, despite a mixed quarter, said that they are seeing sequential improvement. They've also reinstated guidance, so investors like that sign of certainty. Under Armour up nearly 10%. They beat. They're also saying that they're making progress with their restructuring. E-commerce was 25% of revenues, and as you can imagine, the move toward athletic leisure wear really helping out that company. Again, the stock soaring. GM turning around. It had been lower. They put up a big beat top and bottom line. However, as you know, John, supply chain issues around chips, they're saying it could create problems around their 2021 profit outlook. They're going to try to offset that. And then finally, let's check in on a macro trade, because we, of course, have had an interesting move here on the morning around yields with core consumer prices unchanged. That sent yields lower. However, the banks, a piece of the reflation trade, still hanging in there at least a little bit. It's going to be interesting to see what this day brings after a brief pause yesterday, John.
What a run the financials have had, though. Abigail, thank you. Thank you very much. Coming up on the program, President Biden meeting with business leaders to discuss the administration's COVID relief package. That conversation up next with BlackRock's Tony DeSpirito from New York City this morning. Good morning to you all. This Wednesday morning, equities heading higher. We travel north, up 19 points, up by about 0.5%. This is Bloomberg.
We have a very good chance to not only have positive growth, but perhaps a somewhat more encouraging positive growth.
The rebound in the second and third quarter will be quite strong because the expectation is that the vaccine will help clear the way to less restrictive lockdown.
We are going to have a recovery, but it's going to be an uneven recovery.
Of course, it will have direct impact on our growth forecast, and it will be very difficult to reach 6% of growth.
You're going to get a roaring 20s type of recovery and a boom period.
We are certainly seeing ourselves towards the second quarter being almost opening the economy as much as one can.
We should not be too quick to cut back on the expansionary fiscal policy.
We'll get there. The question is not a question of if, it's a question of more when.
Trading revenues coming in better than expected. Everything. Cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
As you know, I've met for a long time with my Republican colleagues. I'm meeting with the members of the House and the Senate as well, and I think we're in a position to think big and move big and to move in a direction that can be not only get the economy back on its feet, but we have to get people well before we get people on their feet.
President Biden hosting key business leaders at the White House, looking to boost support for the stimulus plan he's trying to push through Congress, potentially without Republican support. Republican Senator Rob Portman accusing the administration of going its own way.
I'm discouraged that the current administration seems not to be interested in pursuing the bipartisan solution. Good ideas come from both sides of the aisle, as we have found out again in the previous 5 COVID-19 packages that we've passed in this Congress.
For more, let's bring in Kevin Cirilli down in Washington, D.C., our chief Washington correspondent. Kevin, unity, a bipartisan effort, quickly faded, didn't it?
Precisely. And in fact, the Democrats that I've been speaking with yesterday on Capitol Hill, essentially saying that they really don't feel that they need Republican support in order to advance this measure. Now, Republicans like Senator Rob Portman and others are saying that this is a missed opportunity and a miscalculation on behalf of President Biden, who is going to need Republican support, if not on the stimulus effort, on other initiatives. I do want to bring to note another development that happened within the Democratic caucus yesterday, and that's centrist Democratic Senator Joe Manchin, a Democrat from West Virginia, sending a letter to President Biden as it relates to energy policy, and for him to go back on what he did in his first few days in office with regards to the Keystone XL pipeline. The reason I bring this up is because the margin of majority is so narrow in the Senate. President Biden cannot afford to lose any votes, and a key vote is going to be Senator Manchin. So if you're looking about the policy forecast beyond just stimulus, Jonathan, keep watching people like Senator Portman, Pat Toomey now, and the other 4, in addition to those 2 Republicans who said that they are not going to be running for re-election in 2022. That's who this administration has their eye on as the potential swing votes continue in this Congress.
Kevin, what's the timeline for this at the moment, in your mind? Weeks, months, what is it?
Because the Biden administration is not looking to get Republican support, that makes the timetable much more narrow, and they could get this done anywhere from 3 to 6 weeks. And because of that, if they were to have gone a bipartisan route, it could have taken a couple of months.
Kevin, any other network talking about Washington, D.C. right now probably is not talking about what you and I are talking about. They're talking about the impeachment trial in Washington.
Oh, yeah.
What's next?
It's going to likely wrap up Sunday or early next week. And both sides, candidly, want to see this trial come to a conclusion. There's been some confusion, I think, amongst people that I've been talking with this morning about the vote yesterday. The vote yesterday was whether or not to proceed to trial. And then, but the chances of there being a conviction remain, I would estimate, in the single digits because of the 2/3 majority that is needed to convict versus a majority vote, Jonathan, that was needed to proceed.
A moment for the history books, not for this market, it seems, over the last several months, that's for sure. Kevin, good to see you. Thank you.
Thank you.
BlackRock's Tony DeSpirito seeing a constructive setup for equities, writing the following. Coordinated fiscal and monetary policy plus low interest rates plus vaccine progress and cash on the sidelines equals a positive backdrop. Tony joins us now for more. Tony, a positive backdrop, yet still, people are so uncomfortable with keeping risk on the table. Tony, why?
Yeah, well, I think it's some of what you've talked about earlier. Look, multiples are high by historical standards, but I think that's too simplistic of analysis. I think you really have to think about equity risk premiums and compare PE multiples to interest rates. So on that basis, when you take into account that the 10-year Treasury is just over 1%, actually markets look pretty attractively valued. Plus, you have all those factors that I talked about in our newsletter in terms of vaccine, stimulus, monetary and fiscal policy, cash on the sidelines. All that is propelling the economy forward. And so that's the positive news. And then obviously you've addressed earlier today inflation as a potential risk. We're not seeing it today, but certainly something we have to keep our eye on.
Are you saying stick with the barbell, though? Secular growth on the one side and the unloved cyclical parts of the market, at least unloved for a long time now, until recently, Tony, stick with them on the other side?
Yeah, so I'm a big fan, and this is something we talk a lot about at BlackRock, is really scaling your risks appropriately and keeping your portfolio balanced. And I think the best way to do that is, on one hand, to have a large bolus of high-quality compounding stocks, companies, think like the healthcare and the tech sector, companies like that grow nicely over time, that have some reasonable prices. And then on the other hand, have a portion of your portfolio that's more opportunistic. And I think today, that opportunistic bucket goes into the cyclical value stocks. These are the stocks that were hurt most by COVID. Think about banks, think about energy companies. They're the most deeply depressed, have the most room to recover from a full-blown economic recovery. They're also great inflation hedges, by the way. If you think about trying to protect your portfolio from an inflationary environment, banks would benefit from rising rates as net interest margins would improve. And that's not in the stocks today. The stocks are almost discounting low rates forever. And then similarly, companies with real assets, and I'd put energy in that bucket, would benefit from a rising commodity, rising inflationary environment as well. So I think you got kind of two legs to those investments. First of all, just the back to normal recovery. And then if we do get inflation later on, I think they have the side benefit there.
Tony, great dividend payers too in that bucket, in those two sectors, energy, yes, financials. Is that the emphasis for you?
I think it's really important, actually. If you think about the need for yield, as a society, we're aging. And so as we age, we look for yield investments, but then you look in the marketplace and yield is scarce, particularly in fixed income markets. And equities actually present a better opportunity for income for investors, particularly when the 10-year treasury is at around 1%. You can get a way higher current yield on stocks. Plus, stocks have the benefit that the yield should go up. The income from equities should go up over time, whereas the income from a bond is by definition fixed. And so I see a lot of opportunity for investors to move from fixed income to stocks. I don't think that happened last year. I think last year there was a lot of fear about dividend cuts, and sure enough, the market did have dividend cuts last year. They weren't anywhere near as big as feared. This year, I think that risk is off the table. And so I think equities as a means of getting income is even more powerful today than it's ever been.
Tony, if you're worried about higher rates, though, and you're playing that rate-sensitive play through the financials, at some point the higher rates start to compete with the dividend payers, don't they? Is that not something of a concern?
So I'm not forecasting that. I think that's a risk you need to be prepared for, right? And hence the balance within the portfolio.
Okay. I'm pleased we tidied that up a little bit. Tony, great to catch up, as always. Tony DeSpirito there of BlackRock. Thank you, sir. Coming up on this programme, the analyst action you need to know. That'll be next in our morning calls. Then later, BTIG's Julian Emmanuel weighing in on the rally with big tech and small caps leading the way. That conversation's still ahead. Futures higher. We're up 18 points. We advance 0.5% on the S&P 500. All-time highs at the opening bell. Just maybe. This is Bloomberg.
Focusing on is not so much what goes inside the cars of the future, So they're not working on doing a self-driving car or an autonomous vehicle themselves, but rather they're focusing on the surroundings. So everything that's going to go on outside the vehicle in the future. So that's sensors, cameras, radars that are embedded into roads, street signs, traffic lights, bus stops. Infrastructure that's going to provide information, something to help the vehicle know what's going on around it, to help it, stay on schedule if it's a bus, or avoid other vehicles, avoid accidents, provide information about weather conditions, potential hazards down the road, and so forth.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
Five minutes away from the opening bell, Chairman Powell speaking at 2 p.m. Eastern Time, going into that a lift in this equity market, potentially all-time highs when the chairman takes the stage. S&P 500 futures up 18 to 39.23. Unreal. This market's moved 20% in 3 months. Get your head around that, up 0.4%. That's the story for the equity market. Let's get you some morning calls, some Wall Street recommendations. UBS downgrading Virgin Galactic to neutral, $52 price target. The analyst cited the stock's valuation after rallying more than 130% already this year. It's February 10th. Next up, Piper Sandler upgrading Hain Celestial to overweight, $50 price target. The analyst highlighting a number of sustainable key growth drivers. We're up there by about 2%. And his third and final call comes from the team at Goldman, raising its Twitter price target to 78. The analyst noting the stock's favourable risk-reward profile, with recent innovations driving growth. A stock positive by 2.9%. Coming up, big tech and small caps taking the torch and leading the rally. That conversation up next with BTIG's Julian Emmanuel. With futures positive 18 points on the S&P 500, we advance almost 0.5%. The cash open this Wednesday morning, just around the corner, right here on Bloomberg TV. This is Bloomberg.
That was either illegal or caused disruption. And this was really political satire, kind of writ large, and it was all about actually trying to get to the man himself and make him see how we see him. And in order to do that, we knew it had to be big and it had to be colourful and it had to be somewhere where everybody could see it. It's important because we didn't just do this for attention. This was actually about making a serious point, which is that the majority of people in this country do reject the politics that Donald Trump represents.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
How many times you heard this? Equities up, record high on the cards. S&P 500 futures up 19 going into the cash open. We advance 0.5%. The Russell, the small caps on fire since the back end of October. We had some fuel to it over the last couple of weeks, up by about 0.7%. The Nasdaq up 62. We advance 0.5%. Switch up the board, get to the bond market. Downside surprise in the bond market for inflation. Inflation. Downside surprise yields lower, down by a basis point or so. You know the story though, we've been told it. Base effects kick in, inflation's going high, the Fed won't respond. Nevertheless, yields lower, 114.14 on a US 10-year. In the FX market, euro firmer, a turnaround for a struggling euro, at least year to date anyway. Euro dollar 121.36. And in the commodity market, what a rally we've seen in crude, along with stocks over the last several months. 58.48 on WTI, up by about 0.2%. That's the story cross asset this Wednesday. Let's get to the market desk and get your movers. Here's Abby.
John, let's start out macro, because with this risk-on tone keeping the markets higher, new all-time highs, as you were just mentioning after yesterday's small pause, the main engines, the financials, energy, tech, they're all working. So we have reflation and last year's defense moving higher. Specifically, take a look at Bank of America up 0.6%, despite the fact that yields are now in on that not-so-hot CPI. ExxonMobil